In this video, we're going to discuss our mock test paper 1 for May 2025 examination. This paper is issued by Institute of Chartered Accountants of India in the month of April. To begin with, let's discuss the questions on true or false. As usual, there are 6 questions of 2 marks each for 12 marks. We have to state whether these are true or false with reason. To begin with, the first one. Insurance claim received on account of plant and machinery completely damaged by fire is a capital receipt. The answer is true. In the place of machinery or plant, if it was inventory which got destroyed by fire and we would have received insurance claim, that would have been revenue receipt. So it is almost like asset being sold and consideration received, making it capital receipt. If it was inventory getting destroyed and receipt is made, it would have been revenue receipt. The answer is true. It is capital receipt because the asset is damaged, which is capital in nature. Next one. Wages paid for erection of machinery are debited to profit and loss account. It is false. It's incorrect. Wages paid for installation of an asset are capital in nature. It should be added to the cost of the asset. Any expenditure incurred till the time the asset is ready to be put to use is capital in nature. Transportation of machinery, installation of machinery, wages, trial run, everything. Till the time the asset is ready to be put to use. Once the asset is ready to be put to use, then you do repair or any initial operating losses or any expenditure, all that will be charged to revenue as P&L. Because they're writing these wages into P&L account, it is incorrect. They should have added it to the cost of the asset. So the answer is false. The financial statements must disclose all relevant and reliable information in accordance with full disclosure principle. The answer is true. Full disclosure concept says that, full disclosure convention says that disclose all relevant and reliable information irrespective of the fact whether it is material or immaterial. Materiality concept or materiality convention says that we need to disclose only material information. If you are forced to disclose all information, it is full disclosure. If you are asked to require only disclose relevant information or only material information, then it is materiality. Here they told all relevant and reliable information. So what is this? This is convention of full disclosure. Correct. True. Fourth one. The business of partnership must be carried on by all the partners. There is no such condition. As per the definition of partnership given under Partnership Act, it is an act carried on by all or any one of them acting for all. All the partners can work, but there is no condition that all the partners should work. Even if only one partner is working on behalf of all the partners, that is also accepted. So the definition of partnership mentioned here is incorrect. This is false. What is the reason? It can be all the partners working, but not necessarily all the partners working. One of them can carry on the functions for the sake of all. Got it? Let's see fifth one. Debit notes issued are used to prepare sales return book. Now, don't try to answer it prima facie. Think of the journal entry. What is the journal entry for sales? Debtor account debit to sales. Don't tell sales account debit, please. You are on the verge of writing your examination. What is the journal entry for sales? Debtor's account debit to sales. Very good. Now, sales return is reverse transaction. Reverse the entry. Sales return account debit to debtors. So whenever your customer returns the goods to you, you write the entry sales return account debit to debtor. You are crediting his account. After you pass the journal entry, you will take a print of that journal entry, put it in an envelope, stick it, and then give it to your customer. Body. What is it? Angela, Allah, cover, paper. That paper is called credit note. Why? You have credited your customer's name. Sales return account debit to debtor. You have credited his name, no? You are informing him by way of a note that you have credited his account. So what you issue is credit note. When do we issue debit note? Purchase return. Or for sales return, what should you issue? Credit note. They have given it incorrectly. They have told you will issue debit note for sales return book. Answer is false. In the case of sales return, the note to be issued is credit note. Then come to sixth one. When shares are forfeited because the shareholder did not pay the call money or allotment money, some money that you had asked, what did we do? We forfeited the share. We took the share back from the shareholder. The share capital account is debited. Correct. When we issued the share, we would have credited share capital for increase in the share capital. When we forfeited the share capital will decrease, so we debit share capital. Absolutely correct. Then what happened? The called up capital, correct. To the extent it is called up, you debit share capital. And the share forfeiture account is credited. credited, correct. Why? Share forfeiture is like income. You took the share that you had given to them back. Do you give the money back to them that you had collected? No. To the extent money is paid up by them, which you don't return it back to them, you credit it to share forfeiture account. Am I right? They're telling that you credit share forfeiture account for calls in arrears. Top. To the extent calls in arrears is there, you debit calls in arrears. Sorry, you credit calls in arrears, closing that asset. But share forfeiture account should be credited with amount paid. Calls in arrears account should be credited with amount unpaid. They've given it income. Answer is false. Share forfeiture account should be credited with amount paid up. That's the answer that you should be writing. Got it? Next question. What services can a chartered accountant provide to society? Again, this question is from theoretical framework, a 4-marker question. This comes towards the end of the chapter of theoretical framework. Now, one mistake that people usually end up doing in this is, this question can be asked in quite different languages. They'll ask, what is the role of an accountant in the society? The role of an accountant in the society is the big answer that you see. He can get into industry, he can get into public sector enterprise, he can help in forming fiscal policies for the country, he can build, he can become an entrepreneur, and he can also give service. There are 4 or 5 points. All those 4 or 5 main points you would write when they ask role of an accountant in the society. Here they clearly mentioned services. Have they told what? Service. Service is a very important word. What services can you provide? You can help them prepare books of accounts. You can help them audit those books of accounts. Auditing can be internal audit. Auditing can be statutory audit. Accounts preparation over. Audit is over. You don't prepare accounts. You don't audit, but you can give consultancy services. They'll ask you some problems. They'll ask you some questions. You'll tell solutions. You can give them arbitrary services. Out of the court settlement, if they have a problem, they would start fighting among themselves. Will say, hey, don't go to court. I will give you a solution to your problems. You can give all those services. You can give them tax related services, tax filing, tax consultancy, tax advisory. You can give them financial planning, how to plan their finance, where to keep the money, where not to keep the money. You can give all these services. These are the services. Let's see the answer. Answer is here. See, you would help them in maintenance of books of accounts. You help them in audit, statutory audit, internal audit, taxation, consultancy services, financial advice, and financing investigations. Some of them end up writing the answer which is not this. You start telling that you can work in budgeting department, you can work in production department, accounting department, audit department. You write that answer. Industry, public sector undertaking. You can help in framing fiscal policy. That is right answer when they ask role of an accountant in the society. Here they're asking specifically service. So write only services. They can also ask, what are the departments in which a chartered accountant can work? Then you will write, you can work in finance department, taxation department, advisory department, management accounting department, audit department, budgetary department, control department, all of them. So read the question twice before you write the answer, because it's not wise to write the exam twice. Easier thing is reading question twice, writing exam once, rather than writing answer once and reading question paper twice. Here it's the exam better. Let's get back. Let's now solve question 1C from our MTP May 2025. This question is on valuation of inventory, perpetual system. They have given the details of opening inventory, which is nil. They have given receipts and issues, that is both purchases and sales, or issues or consumption. They want us to compute the value of closing inventory. Which method do they want us to follow? Find out the value of inventory on 31st of March 2025. If the company follows weighted average method. Chalo, let's follow weighted average method. When you do weighted average method, you will not have 2-3 variants in the closing column. You will have only one variant. You have to take the average. Total the quantities, total the amounts, then do total amount by total quantity to find the rate. Let's start. Opening inventory 0. I would write here 1st of January 2025, balance 0, rate 0, amount 0. So should we write this? No, you don't have to, but I still write it. Then same 1st January we purchased 10 units at rupees 300 per unit. So I would write 1st of January receipt, we have purchased 10 units at the rate 300 per unit. 10 into 300 will come to 3000. If there was any inventory before this, I would have found the average, but this is our opening, meaning like first entry. So I would write same as my balance, 10 units at the rate 300 per unit coming to 3000 rupees. This is my inventory. I hope you have no doubts with this. Let's go to the next transaction. After this, the transaction that we have, let me highlight it. This is done. This is also done. Now we're seeing issued for consumption. How many units are issued for consumption? 5 units. So I would write here 15th of January 2025 issued 5 units. I don't have a decision to make because this is I would say weighted average method. If it was first in first out or last in first out, then I have to pick between the variants of inventory that I have. Right now I'll issue 5 units at rupees 300 each or of rupees 300 each. 5 into 300, very good, 1500. Out of this 10 units of balance that I have had, I have issued 5 units. I am left with 5 units at rupees 300, making it 1500. 15th of January transaction is done. Next we have with us 1st of February 2025 transaction, wherein we have purchased inventory of 20 units at rupees 400 per unit. This one is similar to the question that was there in January 2025 examination, wherein they had given us freight and we are supposed to add. There the freight was there on every transaction. Here freight is there only on this transaction. On 1st of February, I bought 20 units at rupees 400. 20 into 400 is 8,000. To this 800, I'll add 500. Because as per accounting standard 2, all the cost incurred till the time the inventory reaches the go down is to be included in the cost of the inventory. I hope you all got it. So I would write here on 1st of February 2025, 20 units at rupees 400. 20 into 400 comes to 8,000. To this 8,000, I will add 500 rupees of freight, making my 20 units to be of value 8,500. 20 units are of now what value? 8,500. Please divide 8,500 by 20. What do we get when we do that? We get the rate per inventory unit. That is 425. Now, on the closing for this specific date, I need to find total value of inventory that I hold. And we'll have only one variant. We cannot write 5 units at 300, 20 units at 425. We'll have only one. We had 5 units in the past. We now bought 20 units. Can I say together we have 25 units? Previously, the value of the inventory was 1,500. The inventory now that we bought is 8,500. Add them together. 10,000. So we have 25 units. Putting together its value is 10,000. Please do 10,000 by 25. What do we get? 400 rupees will be the revised rate. That is weighted average rate of this inventory. What is happening after 1st of February? After 1st of February, on 15th of February, I issued for consumption 10 units. Easy peasy transaction. 15th of February, in the issues column, I'll write 10 at the rate 400. 10 into 400, 4,000. I had 25. I issued 10. 25 minus 10. I'm left with 15 units and it will be at the same rate. Hey, remember, at weighted average rate, the rate will remain same. Only when you purchase, it will change. Under FIFO, there will be 2-3 variants and it keeps changing. So I'll write 400 here. 15 into 400 will be 6,000. Out of 10,000, 4,000 issued, left with 6,000. Last transaction, 20th of February 2025, we issued for consumption 10 units. So I would write here, on 20th of February, we issued 10 units at the rate 400. 10 into 400, 4,000. We had 15 units. In that I issued 10. Now I'm left with 5. 5 units at the rate 400 comes to? Very good. So basically I have 5 units, 400 per unit, 2,000 rupees. This is my closing inventory as per weighted average method. Let's now solve question 2A from MTP May 2025 examinations paper, which is released by Institute in April. This question is on machinery account. They basically want you to prepare machinery account after adjusting depreciation under written down value method. On 1st of April 2024, supervisor and company which depreciates its machinery at 10% per annum on WDV method had 29,16,000 to the debit of machinery. So this is as on 1st of April 24. We've done this kind of questions also in the past that though the first line of the question starts with 2024, our working note might not start with 2024. It might have to start sometime before this. Is this one of those questions? We don't know. Let's read the last line of the question to understand this. Show the machinery account for the year 24-25. What's relevant is 24-25. But if you read further, they tell that on 1st of October 2024, again during the current year, you sold a machinery which was purchased on 1st of April 2022. So our working note starts on 1st of April 2022. So I would say in the working note, 1st of April 2022, I had a machinery of value 2,40,000. This machinery on a later date got sold for 1,35,000. When did it get sold? 2024. We're right now in 22. 23 is the year that we're in. You should do 22, 23, 23, 24, then 24, 25 is the year in which it gets sold. Now, in the middle of the year. Further, it got sold for 1,35,000. Also, a new machinery at a cost of 4,50,000 was purchased on 1st of October 2024. This again in the third year. So we had one machinery in 2022. It got sold in 2024. In 2024, we bought one more machine. And anything else? No. You incurred 24,000 as installation charges of this 4,50,000 machine. So that will get added to the cost of that asset. That new asset purchase will not be 450, it will be 4,70,000. Okay. Now, I will depreciate this machine as on 31st of March 2023. Which method? WDV. How much rate? 10%. Right here. Less depreciation at 10%. Can I say it will be 24,000? It will become 2,16,000. This is book value on 1st of April 2023. When is it getting sold? 24, 25. So one more year of depreciation. That is 31st of March 2024. Let's do less depreciation at 10%. Not SLM, WDV. If it was SLM, I would have written 24. Because it is WDV, I'll write 21,600 as depreciation. If you deduct that, you get 1,94,400. This is book value as on 1st of April 2024. If you remember, on 1st of April 2024, they've given us the value of the full machinery. What is the value of full machinery? 29,16,000. 29,16 is the total value of the machinery on that day. So in the total column, I'll write 29,16. So not the entire machine that I have is sold. So there is some other machine other than this machine that we sold. What is that? That is the machine that we are retaining in our business. Do 29,16,000 minus 1,94,400. 27 lakh. This is the value of the machinery which we are retaining in our business. Got it? This is not sold on 1st of April. When is it sold? This is sold on 1st of October. So we are right now on 1st of April. I'll depreciate it till 1st of October. Remember once again, depreciation is to be done only on the machinery which is getting sold, not on the entire machine. How many months is it? April, May, June, July, August, September. How many months is that?
6 months.
Compute 6 months depreciation on 1,94,400 at 10%. 194,400 into 10% into 651. 9,720. After this depreciation, this machinery will get sold. If it gets sold, this column of this machinery should become 0. Do you all agree that that column should become 0? If the column has to become 0, we'd have to deduct some portion. Do you agree with me? Tell me how much is it that I should deduct? 194,400 minus 9,720. What do we get? What do we get? Minus 1,84,680. That's what I was expecting. I was expecting we would tell minus. That's okay. If you write plus, the asset will become more. If you write minus, that's when it will become 0. This 1,84,680 is not the selling price. This is the cost or book value of the machinery that's getting sold. Don't try to adjust there only and identify the profit or loss. Do a separate working note, which is happening on 1st of October 2024. On this date, what is the cost of the machine? 184,680. Don't write minus here. Sale price. What is the price at which it is sold? It is sold at 1,35,000. Right, 1,35,000 to be sale value. Which is more? Sale value is more or cost is more? When the cost is more and the sale value is less, it is loss. Deduct, no? 184,680 minus 1,35,000. 49,680 is our loss on sale. I'll receive cash. I'll debit 1,35,000. My machine is going out. I'll credit machine by 184,680. Difference is loss. Debit all expenses and losses. I will debit 49,680 to my P&L. I hope you people understood. Very nice. So the journal entry is bank account debit, P&L account debit to machinery. This will be handy when we write ledger account. So always prepare a working note for sale of the machine. Now we have sold this machine. They told on the same day you purchase another new machine. Same day. You purchased another new machine. What is the value of the machinery purchased? 4,50,000 for machine, 24,000 for installation. 4,50,000 plus 24. Can I say 4,74,000 will become the cost? Yeah. I'll write add. Oh, there is no scrap part here. I would write here same date purchase of a new machinery for 4,74,000. This will all just come in the total column. That's it, yeah. No other transactions. Just do depreciation at the end of their 31st of March 2025. This time depreciation will be provided not on the machinery that is sold. Why? Like you mentioned, it is sold. Once it is sold, how can you charge depreciation? Depreciation is only till the date you use it. Now compute depreciation on the retained part. 27,21,600 into 10%. Can I say it will become 2,72,160? And on this, please don't write 47,400. It is purchased in the middle of the year. Do 4,74,000 into 10% into 652. October, November, December, January, February, March. Got it? 23,700. Add 23,700 with 2,72,160. What is it that we get? 4 lakh. Hey, 2,95,860. I told add them. Oh, we did 474 minus 23. Your answer is right, my question is wrong. Now individually take the totals and this will be the value of individual machines. But when we're doing accounting, we don't care about all of this. We only care about this ledger, this total column. This total column, if the number is negative, it will come in the credit side. In this total column, if the number is positive, it will come in the debit side. And for this sales, please don't write 184,680 on the credit side. See this journal entry and pass this journal to ledger. Can we begin? Okay, let's start with 29,16,000. 29,16,000 will become debit side balance brought down. I would write 1st of April 2024. Am I right? Yeah. Dates are slightly incorrect. Let's correct them. To balance brought down 29,16,000. Next transaction that I have is 9,720 depreciation. Minus item. So I'd have to write it on the credit. I would write it on 1st of October 2024. By depreciation 9,720. Done. Come back to the next item in the total column. 184,680. 184,680 is sales. Please don't write 184,680 straight. I have written WN for a reasoning. What do you mean by WN? Yeah, WN sometimes win, sometimes learn. Sir, learn starts with M. Yeah, you don't know English? Okay. Now we'll see the journal entry for this. What is the journal entry? It is bank account debit, P&L account debit to machinery. So in machinery account, I'll write buy bank and buy P&L. I'll write buy bank and buy P&L. Come on, let me write here. I would write here buy bank, buy P&L. Transaction is happening on 1st of October 2024. 1st of October 2024. So the amount that we received is 1,35,000. Amount that we lost is 49,680. Check 1,35,000 and 49,680. Putting it together, you will get 184,680. Next we have 4,74,000. 474 is purchase. Debit because it is positive item. Entry will be to bank account. I would write here to bank account. 1st of October 2024. Amount would be 4,74,000. Got it? What do we have after this 474 on 1st of October? Depreciation. Nice. Depreciation of 2,95,860 is credit because it is minus item. I would write here by depreciation. What date will this be? End of the year. 31st of March 2025. Oops. Oops. Help, help, help. Help. Allah, really help. 2025. By balance carried, by depreciation 295,860. You find the balancing figure here and check with the number that we have there, it should match. Take the total here. What do we get? 2916 plus 474. 33,90,000 minus all these items. You get 28,99,740. That, my friend, is the balance carried down. Closing balance of our plant and machinery. And this is the ledger. This is the working note that they've asked us to do. There you go. Let's solve question 2B from our April 2025 mock paper. This question is on bank reconciliation statement in the books of Samir. Let's start reading. On 30th of September 2024, bank account of Samir according to bank column of cash book was overdrawn to the extent of 32,496. If you are having this habit of making all the add items less items add because it is overdraft, please stop that. You always try to do it like this. Take balance as per cash book as minus item. Write add items as add, less items as less. And don't try to write all add items at one place, all less items at one place. Go by the order. Read the first one. If it is add, you add. If it is less, you deduct. As sweet and simple as that. Don't write add and less just in the particulars column. Write minus plus symbol in the amount column also. Because what if you written less here, but there you don't write anything. If you add, you end up getting the wrong answer. And you are lucky ducks if this kind of question comes in the exam. Because they have given balance as per cash book overdrawn 32,496. On the same day, they mentioned the balance as per passbook also. So at the end of the problem, you get to know whether the answer that you done is correct or incorrect. Even if you do some mistakes, you can do here up, down, and then arrive at the answer. Never know. If you have done good Papa Punya, you might get this kind of question only with both answers. And the last point to notice, whenever they've given you both cash book and passbook balance, don't feel that liberty to start with passbook. No, you have to always start with cash book balance only. You will start with balance as per passbook only in the case where cash book balance is unavailable. Is cash book available? Not available. Start with balance as per cash book. Write it as minus 32,496. So I'll write here balance as per cash book minus 32,496. Because they've made it available, I'll write balance as per passbook, which is 5,39,024. I would write it here. Then at the end when I total, the balance should match. Shall we begin with the adjustments? See the first one. A check of rupees 1,05,120 deposited on 29th September was credited by the bank only on 3rd October. We deposited the check on 29th September. They cleared the check on 3rd October. In between 29th September and 3rd October comes 30th September, the date on which we're preparing BRS. On 29th September, when I deposited the check, my balance as per cash book increased. My passbook balance, P for passbook, will increase only on 3rd of October. But we are preparing BRS on 30th September. On 30th September, this passbook has not yet increased. Cash book balance has gone up because of check deposited. Passbook will increase only when the check is cleared. This is the case of check deposited but not cleared. So cash book has increased, passbook has not. We're starting with cash book. We're making changes in cash book. What should I do? Reduce. Shall I minus 1,05,120? Yeah, when you're teaching the answers to your friend in the exam, don't tell less. Tell deduct or minus. Why? When you say less, he might hear it as plus. When you say plus, he might hear it as less. You will be the reason why your friend will lose 2 marks. He might curse and it might hit back to you on it. So do add and minus or add and deduct. Sir, are you encouraging us to copy? No, I am not encouraging you to copy. But if in case you copy, okay. Second point, a payment by check rupees 1,280 has been entered twice in cash book. Someone taught them double entry system incorrect. When you make a payment by check, you should record once in cash book, once in passbook. Both should go down once. No, they've entered it twice in cash book. Someone told we have to follow double entry system. So what did they do? They entered it once in cash book. They entered it once again in cash book. So cash book went down by 1,280, 2,560. Passbook went down only by 1,280. So are they matching? No. So we're making changes in cash book. What do I do? Add by how much? 1,280. Shall I add 1,280? Right here. Add payment by check recorded twice in cash book 1,280. Let's go to next one. On 29th September, that is before 30th September, the date on which we're preparing BRS. Bank credited an amount of 93,920 received from a customer of Samir. But the advice was not received by Samir until 1st October. Advice is information, message. They have not given you a message. So this is direct deposit by customer into bank account. When we say customer, it is not bank's customer, the account holder. It is account holder's customer, the data. My customer, I am Samir. my customer went to my bank and then deposited money in my account, because of which banker has increased my passbook balance. He didn't inform me, so I have not written entry in my cash book. It is passbook balance increase because of direct deposit by customer, not recorded in cash book. Is there a difference? Yes. Clear difference. We're making changes in cash book. What do I do? Add. Shall I add? Add 93,920. I will write here. Add direct deposit by customer 93,920 rupees. Let's see the next adjustment. Fourth one. Bank charges of rupees 4,640 had not been entered in cash book. You should have entered, no? Error of omission. Passbookally they have entered. Passbook balance has gone down. In cash book you have not entered. Cash book balance has not gone down. We're making changes in cash. What should you do? Reduce it. That's it. Minus bank charges not recorded in cash book. 4,640. Can I go to next one? Next up, we have on 6th of September 2024, the bank credited rupees 1,60,000 to Samir in error. 16 lakh. Oh, they've done an error with comma. Illi ಒಂದು comma ಬರಬೇಕು. Illi ಒಂದು comma ಬರಬೇಕು. See, one comma can change your life. 16 lakh to Samir in error. Banker by mistake has given money to our account. What do we do in this case? Sir, withdraw the money and leave the city run. Hey, in BRS, what do we do? Passbook balance has increased. Credit, whenever I deposit money to you. Now, for example, Kambir, do me a favor, transfer 10,000 rupees to me. I will get a message on my phone. Your account has been credited. I will show the message if you. But artha aita hange 10,000 transfer madod bedva. Okay, 16 lakh transfer madibekadu. So someone has transferred money to 16 lakh to Samir, or banker has given wrong credit, because of which passbook balance has increased. Cash book ali entry bardin. Balance as per passbook has increased. Balance as per cash book has not. Where are we making changes? Cash book. What do we do? Add. Shall I add? What do we add? 16 lakh. Add wrong credit in passbook 16 lakh rupees. Got it? Be careful. Don't be like me. Observe the comma. Read last adjustment. A bill of exchange for rupees 11,20,000 was discounted by Samir. Hey, Samir is drawer. Samir, I am Samir. I am drawer. I have sold goods to somebody. Somebody has to give me money. I have drawn a bill, given it to him. Hey, sign my book. He signed and then he gave it back to me. He is drawee. I am drawer. I am seller. He is my customer. This bill, I want money immediately. I don't want to wait till maturity. I will go to banker and say, banker, give me money. Banker takes the bill, gives me money immediately. That is called discounting. Banker will wait till maturity date. On the maturity date, banker will go to my customer and collect money. If banker collects money from my customer, I am least bothered. I will not make any entry. But my customer is an Allah. This guy is not customer. This guy is Fallan. I did not pay money. He did not pay money to banker. Banker did not want to fight with my customer. Banker came back to me, threw the bill on my face and politely asked for money. I gave him the money. See, the bill was dishonored on 28th of February, but no entry has been made in books of Samir. Samir has not entered anything in the books. Banker deducted the money from bank balance. So my passbook balance will decrease by 11,20,000. My cash book balance has not decreased. Passbook balance has decreased, cash book balance has not. Where are we making changes? Cash book. What do I do? Minus Marana. Sometimes in this kind of a question, they will tell how much is the discounting charges. It is irrelevant. Do it for full bill value. Discounted bill, dishonored. 11,20,000 deducted. Okay. What do we have next? One last adjustment, 7th one. Checks issued up to 30th September but not presented for payment. 1,06,008. Checks have been issued. I have given the check. When I give the check, I'll make the entry in my cash book. My cash book balance will decrease. But these checks have been not presented for payment. The customer to whom I have given, they are lazy like you. They have not deposited a check with the bank. And the banker has not cleared. Passbook balance has not decreased. Cash book balance has decreased. Passbook balance has not. Where are we making changes? Cash book. What do we do? Add. Shall I add back? How much do I add? 1,06,080. Got it? Now, check if the total comes to 539.24. That means you've done it correct. Let's now discuss question number 3A from our April 2025 mock paper. This question is on final accounts of sole proprietorship, manufacturing concern. Because in the books of Mr. Black, when they've asked us to do accounting, they've asked us not for trading P&L balance sheet. They've asked us to do manufacturing account, trading account, P&L account. In the past, this question was asked for 20 marks in CA Foundation examination, not under the new scheme. Under the old scheme, they'd asked for 20 marks, including balance sheet. Now they've removed balance sheet, they've cut 10 marks. They made it manufacturing, trading, P&L, 3 ledgers for 10 marks. It is actually a good deal, not at all bad deal. Let's begin. And I would want you to solve all 3 together, manufacturing, trading, P&L. Don't go to an idea of finishing manufacturing first and then doing trading and after trading doing P&L. Keep all 3 open, read the item, whichever item belongs to whichever account, post it. Let's start. To begin with, what do we have? In our trial balance, we have stock. Stock is opening stock. Opening stock will be there in trial balance. Closing stock will be there in adjustments. Opening stock will have 3 variants. Same is closing stock also. Raw material, work in progress and finished goods. You need to remember that finished goods will go to trading account, opening and closing. Work in progress will come in manufacturing account, opening, closing. I'll repeat, finished goods, opening stock, trading account debit, finished goods, closing stock, trading account credit. WIP, opening stock, manufacturing account debit, WIP, closing stock, manufacturing account credit. Then we have with us raw material. Raw material, opening, closing will not be written separately anywhere. Raw material, you would have to take opening plus purchase of raw material minus closing stock of raw material. We give this the name consumption of raw material. This has to be written with this name consumption of raw material in a manufacturing account on the debit side. I repeat, opening and closing stock of finished goods, trading account. Opening and closing stock of WIP, manufacturing account. Opening and closing stock of raw material plus purchase should be written as consumption of raw material in manufacturing account. I hope you got this. Let's begin. To begin with, we have raw material, 2,10,000. Where do I write? Like just I mentioned, no, manufacturing account. In manufacturing account, I would write consumption of raw material, opening 2,00,000. To this, I would add purchase, deduct closing, and that would be the consumption in the account. Sir, why did you leave one line gap here? This is to write opening WIP, which I don't know right now, but we'll get to know in some time. Done. What's the next item? WIP opening. Yeah, we just told this. We're just talking about this, no? 95,000 of WIP will appear in manufacturing account opening. We're not doing balance sheet. If you're doing balance sheet, these two will appear in opening balance sheet to find capital as balance and figure, which will eventually go to closing balance sheet. But lucky you are, only manufacturing, trading, P&L. Next, we have with us finished goods. Finished goods is 1,55,000. This would appear in our trading account, debit side. Come to trading account. See, first is manufacturing. I have continued trading account here only. On the debit, I'll write to opening stock of finished goods, 1,55,000. What's after finished goods? We have with us sundry debtors. Sundry debtors will go to balance sheet, which we are not preparing. Ignore. Carriage on purchases. Usually have the tendency of writing this carriage on purchases, freight inwards, carriage inwards in trading account. That is in a non-manufacturing entity. This, my friends, is a manufacturing entity. Here you don't buy finished goods, you buy raw material. Raw material bought will come to factory. Factory is represented by manufacturing account. So remember, freight inwards, carriage inwards, all these carriage on purchases transactions, all of this should come in manufacturing account, not in trading account. You got it? Let me write carriage on purchases in my manufacturing account. Manufacturing account, I'll write carriage on purchases 15,000 rupees. What's next? Bills receivable, asset, it will go to balance sheet. Ignore. Wages. Wages is expense. Salaries is indirect expense. Wages is direct expense. Salaries will go to PL. Wages will go to usually trading in a non-manufacturing entity. Here wages are paid to laborers who are working in factory. So wages should go where? Manufacturing account. Wages should go where? Manufacturing. If you by mistake, if you have written wages in trading account, gone. Why? Your cost of finished goods manufactured will be wrong. If cost of finished goods manufactured is wrong in manufacturing, it's wrong in trading account also. GP and NP will match, but still you would lose good marks. Careful. Wages. How much is it? 1,30,000. If there is any adjustment, it would be in inner column. See, there is some adjustment for salary, there is some adjustment for wages, there is some adjustment for rent and lighting. I would have to remember that. So I'll keep wages 1,30,000 in inner fund. Would we be doing adjustment now? Adjustment later. I just park the money in my inner fund. Got it? One more thing, I'll tell it to you right now. If you get depreciation in trial balance, where would you write it? P&L account. If depreciation is on building, depreciation is on furniture, you write it in P&L. If the depreciation is on factory building, if the depreciation is on plant and machinery, it will not go to P&L. It will go to manufacturing account debit side. Little cautiousness is required when you do manufacturing concern. Don't take all expenses to P&L. Please. Yeah. Next we have salaries. Salaries will appear where? P&L. But there is some outstanding amount. We need to adjust. So what do I do? Inner column ali ittiri. Amel note. This is manufacturing. This is trading. This is P&L. I'll write here salaries 1 lakh in inner column. What's after salaries? Telephone and postage. So telephone factory lidre, we'll assume that it is normal general administration expenditure. Write it in P&L. This salary adjustment will do later. I would write here telephone and postage 10,000 outer cost. Next we have with us repairs to office furniture. Repairs to office furniture will be P&L. If it was repairs to factory machinery, manufacturing. Artha agtidya? Next we have with us cash and bank. Cash and bank is asset. Office furniture is asset. This will go to balance sheet, which we are not preparing. Ignore. Repairs to plant, 11,000. Manufacturing. Plant is a machine which is used in manufacturing process. Don't write it to PL. Yeah, you think you have confidently done the answer right. Your net profit will still match, but your cost of goods manufactured will be incorrect. GP will be incorrect. 11,000 repairs to plant. Then what do we have after that? Purchases. Purchase is not finished goods. Yeah, purchase is raw material, obviously. Why? If you have your factory to manufacture finished goods, why will you buy finished goods? You will buy raw material and then convert, no? Exactly. So 8,50,000 will be written where? Manufacturing account. It will be added to opening stock of raw material in order to find consumption of raw material. So I would write here purchase of raw material 8,50,000. Got it? What's next? We have with us plant and machinery 7 lakh. Manufacturing account al pariyana? No, asset, balance sheet. Ignore. Sir, why? We are not preparing balance sheet. Rent and lighting. You will have one doubt. Sir, rent and lighting. Should we rate it in manufacturing or should we rate it in P&L? Depends what rent. Office rent, P&L. Go down rent, trading. Factory rent, manufacturing. You know? Factory rent, manufacturing account. Go down rent, trading account. Office rent, P&L account. Showroom rent, P&L account. Lighting at factory, manufacturing. Lighting at go down, trading. Lighting in showroom or office, P&L. Right now we don't know. There is given some adjustment as to how much is for each of it. Namak gottilla. What to do? Inner column. Shall I write in inner column? Rent. I would write here to rent. Inner column 60. To lighting 13,500 inner column. To the extent it belongs to office, I will deduct it from here, post it to P&L. Balance amount here will be written in the outer column of manufacturing. I'm writing it in manufacturing right now. Next we have general expenses. General expenses will go to P&L to the extent of 15,000. Let me write in my P&L account below repairs to office furniture 15,000. You guys got this? What's next after that? Come to Sundri creditors account. Sundri creditors 1,50,000. Balance sheet liability side will not write it here. Ignore. Bills payable 75,000. Balance sheet liability side. Sale of scrap. Manufacturing account. In the process of manufacturing, not every unit of raw material which will go inside will come out as finished goods. In CA also, raw material is 100. Finished goods is only 20. 80 will be scrap. And sometimes by reprocessing it will end up becoming finished goods which fine quality. Sometimes people end up not being worthy for the course or they think the course is not worthy for them and they exit. Like that only. Some units of raw material will turn out and then eventually come out as scrap. That what comes out is again sale, but not at its full value. So in your manufacturing account on the credit side, you write by sale of scrap. Don't get offended, yeah. You have to take it as a challenge. Or ನಮ್ಮ ಮನೆಗೆ ನುಗ್ಬಿಟ್ಟು ನಮ್ಮನ್ನು ನೋಡಿದ್ರು ನಮ್ಮನ್ನು ಸೋಲ್ಸಿದ್ರೆ ನಾವು ಅವ್ರ ಮನೆಗೆ ನುಗ್ಬಿಟ್ಟು ಅವ್ರಿಗೆ ಹೊಡಿಬೇಕು. ನಮ್ಮ ಮನೇಲಿ ಹೊಡೆದ್ರು ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಅಳ್ತಾ ಕೂತ್ಕೊಂಬಾರು. Correct, no? See, they came to Bangalore, they defeated us. We went back to their room, we defeated them. And a smile. and a hug, and we came back. Whenever someone tells something, you have two options. One, get angry and get offended. Second one, bless. You can get angry, you can get offended. Second one, take it as a challenge and then come back. All big persons have not taken offense personally. They've taken it with seriousness and they made a comeback. How can you tell that and they would to jagala adbutidre? They would have not become that great person. They would have become someone who just does protests on streets. So remember the insult. It once so happened, KL Rahul was playing. He was not in the best of his forms. Kevin Peterson made fun of him. He told, it's so bad, it's so boring to see him bad. Rather, I would watch paint dry on the wall. He remembered this. Months later, when KL Rahul finished 5,000 runs in IPL, Kevin Peterson told, such a nice, amazing player that we have here. He had forgotten Peterson that he had told. KL Rahul told, so it was nice. Then Peterson told, yes. So it's better than watching paint dry. He told, yes, that's the words that you told me last time. And then recently also they were rewarding him something, okay? The captain, the coach was trying to give it to, Himang Badani was trying to give it to KL Rahul. He told, no, give it to Kevin Peterson. I'll take it from his hand. He took it from the hands of Kevin Peterson. So wait patiently for your time to come and then give the comeback. Nice. Understood. Sale of scrap in manufacturing account credit side 25,000. What do we have next? Commission received 4,500. Income. Commission received will be written in P&L account. This is manufacturing. This is trading. This is P&L. I would write here by commission received 4,500. Sir, again, why did you write one line below? I would want to write gross profit brought down from trading to P&L. Okay. Next, provision for doubtful debts. This is expense. When you create it, it is expense. Once you create it, it is liability. I'll write this provision for doubtful debts in my trading, in my P&L account on the debit side. Shall I write it here? Sir, again, 2 lines gap. Rent and lighting, what we have written in manufacturing, will be posted to P&L. No? Later we'll do the amount. Right now, I'll just write the name. How much provision for doubtful debts? 16,000. Everybody got this? What's next? Capital account 10 lakh. This will go to balance sheet which you are not preparing. Sales 16 lakh 72. Where would I write this sales? Trading account. Very nice. In my trading account, I would write credit side by sales. How much? 16 lakh 72,000. What is after sales of 16 lakh 72? Bank overdraft will appear in balance sheet as a liability 85,000. We're done with all items in trial balance. What do we have next? Adjustments. Raw material, closing balance of raw material 1 lakh 62. What do we do with this? We should do no consumption of raw material. Opening plus purchase minus closing. Opening plus purchase minus. So in my manufacturing, I have written here opening raw material 2 lakh 10 plus purchase of raw material 8 lakh 50 minus closing raw material. How much is closing raw material? 1 lakh 60. Please do this 210 plus 850 minus 162. 8 lakh 98,000. Got this? What's after this? Next to this closing stock should have gone to balance sheet, closing balance sheet on the asset side, but we are not preparing balance sheet. Ignore. Finished goods. Finished goods closing stock will go to trading account credits. Where would it go? Trading account credit side. This is manufacturing. In trading account on the credit side, I would write by closing stock 1,81,000. After writing here, the same closing stock would have been written in balance sheet asset side. But we are not preparing balance sheet. So I'll write it here and then I'll leave it. What's after this closing stock? Work in progress is 78,000. WIP will appear in manufacturing account. Opening stock on the debit, closing stock on the credit. Shall I write this 78 in manufacturing? Come to manufacturing, opening WIP debit side idea. Closing stock, I'll write here. Closing WIP. Understood? What's after that? Salaries and wages unpaid for the year are 9,000 and 20,000. Unpaid salaries 20, unpaid wages, unpaid salaries 9, unpaid wages 20. This is expense and liability. Expense because benefit is taken, liability because payment is not made. Expense will be written in respective trading or P&L or manufacturing. Wages of 20,000 is there in manufacturing. We've written it in inner column. 1,30,000 is expense incurred unpaid. 20,000 is expense incurred but not paid. Together total wages is 1,50,000. Employees or wage earners, laborers have worked us for 1,50,000. We paid them 1,30,000. 1,30,000 will appear in cash account credit side as payment. 20,000 will appear in balance sheet as liability. But we are not preparing balance sheet in this case. Leave it. Next, salaries outstanding 9,000. 1,09,000 is the benefit taken from employees. I have paid 1,00,000, which will appear in cash account credit side. 9,000 what is not paid will appear in balance sheet as a liability. Together 1,09,000 is my expense. Understood? What's after salaries? Then we have rent is to be charged 3/4 to factory, 1/4 to office. Come here. Rent I have written 60,000 in manufacturing inner column. In this 3/4 is factory. 1/4 will go to P&L. So I will deduct 1/4 from here. Office rent. How much is 60,000 into 1/4? 15,000. So rent of factory will be 45 manufacturing account. Rent of office which will appear in P&L account is 15. This is 60,000 into 1/4. Understood? What's after this? Lighting. Lighting 2/3 to factory, 1/3 to office. I've already written lighting in manufacturing account debit side 13,500. In this 1/3 should be transferred to P&L. Do into 1/3, you get 4,500. 1/3, alva? Yeah, 1/3. There is a good chance that you end up doing 1/4 because just before this you did 1/4. Read question cautiously and then process. Don't keep any carry forward from the previous adjustment to this one. 9,000 is lighting at factory. It will appear in manufacturing. 4,500 is lighting at office. It will appear in P&L. I have written 4,500 in P&L. By this we are done with all the adjustments also. They want us to prepare manufacturing, trading, P&L. It's ready. Manufacturing accounts objective is to determine the cost of goods manufactured. Trading accounts objective is to determine the gross profit on goods sold. Objective of P&L account is to find net profit. So, in your manufacturing account, you will find cost of goods manufactured or cost of production. This will appear on the credit side. This will be written by the name trading account. In trading account, we'll write on the debit side to manufacturing account. Usually in trading account, you remember writing 2 purchases. That is for the goods purchased. Here we don't purchase. What do? We manufacture. So in manufacturing account, we'll write by trading. In trading account, we'll write to manufacturing. Everybody got this? Come on, patapat. Take the total on the debit side. 95 plus 8,98 plus 15 plus 150 plus 11 plus 45 plus 9. 12,23,000. From 12,23,000 deduct 78 and 25. 11,20,000 is by trading account. You guys got it? So in manufacturing, I wrote by trading. This is cost of finished goods manufactured. In manufacturing, I written by trading. In trading, I'll write to, very good, to manufacturing account 11,20,000. Done. Now identify GP. 1,55,000 plus 11,20,000. But this side you do the total first. 1,672 plus 181. We get 18,53,000. Minus 1120 and 155. GP would become 5,78,000. This 5,78,000 GP is carried down from trading to P&L. P&L I'll write 5,78,000 to be the starting point. Add 4,500 commission received, which would make it 5,82,500. 582,500 will be the total on both sides. From this, I'll identify my net profit. How much is my net profit? 4,09,000. Very nice. This is our net profit. Did you guys get this?
Yes.
Let's now solve question 3B from our April 2025 mock paper. This question is on dissolution of partnership. They don't want you to do piecemeal distribution. They want you to do realization approach. Basically, they've given details of partnership X, Y, and Z. We partners, 3 partners. 3 partners sharing profits and losses in the ratio 3:2:1. Come to the end, what do they want us to do? They want us to prepare realization account, cash account, and partners capital. Hey, they've not asked balance sheet. Once the firm is dissolved, what is there in the balance sheet? There's nothing. Balance sheet asset side empty, liability side empty. So they want you to prepare realization, partners capital, and cash and bank account. Shall we begin? To begin with, start with the items on the liabilities. So you have capital of X, Y, and Z, which is 14 lakh 20, 8 lakh 80, and 5 lakh. Post all the three to respective capital account. Remember, whenever the question comes somewhat like this, you would have to keep your realization, partners capital, cash and bank, all three open. Post items simultaneously to all. Shall we do it? In my partner's capital account, I would write here Y balance brought down. How much is X? 14 lakh 20. How much is Y? 8 lakh 80. How much is it of Z? 5 lakh. So I've written respective capitals in their respective capital account. What do we have after this? The next thing that we have is general reserve. This general reserve of 6 lakh should be shared between partners in their PSR. We know their PSR. What is their PSR? 3:2:1. Shall I share 6 lakh in 3:2:1? Okay. Let me write here by general reserve. General reserve is decreasing. Debit general reserve. Capital is increasing. Credit capital. Entry is general reserve account debit to capital. 6 lakh into 3/6. 6 lakh into 2/6. 6 lakh into 1/6. 3/6 will be 3 lakh. 2/6 will be 2 lakh. 1/6 will be 1 lakh. So 3 lakh, 2 lakh, 1 lakh is the proportionate share to each of the partners. You guys get this? What do we have after that general reserve? Employee Provident Fund. This is not a reserve. Don't be like Chindi would for a partner support. No. Employees who worked in the firm, their hard work, you need to give this money to them when they retire. But before they retire, partnership firm itself is getting dissolved. So you have to pay this to them. This is a liability. All the liabilities and all the assets on realization will be closed by transfer to realization. Now we'll close this employee provident fund by transferring it to realization. Liability has to be debited. Realization account has to be credited. Liability has to be debited. Realization account has to be. What is the journal entry for employee provident fund? Employee provident fund account debit to. Very nice. Employee provident fund account debit to realization. Shall we do the same? Very nice. Come on. Let me write in my realization account by employee provident fund. How much? How much is that money? 2 lakh 40. Same will apply with next liability creditors also. Liability of creditors 4 lakh 96. Oh my God. Will be closed by transfer to realization. Liability has to be debited. Realization account has to be credited. Entry is trade creditors account debit to realization. In realization account, I'll write by trade creditors 4 lakh 96,000. Did you all understand 4 lakh 96,000? What's next? Next we have with us land and building. Land and building is an asset. Land and building is an asset. Land and building, the asset, which is 19 lakh 40, will be closed by transfer to. Very good. It will be closed by transfer to realization account. The journal entry will be realization account debit to land and building. Realization account debit to. In my realization account debit side, I'll write to land and building 19 lakh 40. To land and building 19 lakh 40. Next I have with us machinery 7 lakh 52. Machinery of 7 lakh 52 should be again closed by transfer to realization. I'll write the entry realization account debit to machinery. To machinery, to stock, to furniture, to trade data, except cash. To machinery, to furniture, to stock, to trade data. Help me with amounts. Machinery 7 lakh 52. Furniture 4 lakh 20. Stock 2 lakh 23 200 and trade data 6 lakh 23. I've closed all the assets and all the liabilities by transfer to realization. For assets, entry is realization to assets. For liabilities, the entry is liability to realization. Last item, cash. Sir, cash yak transfer madila. Cash will open one separate ledger and write. Understood? I'll write in my cash account 176,800. Cash account, debit side, to balance brought down 1,76,800 rupees. Got it? Next ಏನಿದೆ ಅಲ್ಲಿಗೆ balance sheet khatam. Let's go to items given later after balance sheet, that is adjustments. There was an unrecorded investment which was sold for 1 lakh 20. The asset was not recorded only. It is like the money that you find in your book. Like 3 days before the exam, you open your economics book to study. There you see money. Not money word. Money only. Actually, money is there. Why? Sometime when you were attending the class, you had kept some money that you forgot. Now you saw. My God, you have not recorded this asset in balance sheet only. Full lottery. Full money profit. Correct or not? You sold these investments for what value? 1,20,000. 1,20,000 cash will come in. Debit cash account. Credit will be investment ಬರೆಯಕ್ಕಾಗತ್ತಾ? Investment credit ಮಾಡಕ್ಕಾಗಲ್ಲ. ಯಾಕೆ ಹೇಳಿ? In order to credit investment, investment should have been there as debit balance in balance sheet, which is not there. Profit. Any profit or any loss arising in the process of dissolution will be returned to realization account. I'll repeat. Any profit or any loss arising in the process of dissolution will be returned to realization account. So the entry for this unrecorded investment sold is bank account debit to realization. I'll repeat. Bank account debit to. Very good. So in cash account or bank account, I would write debit side to realization. Money received on unrecorded investments. 1,20,000. Got it? In my realization account, I would write credit side. Another very thing by cash account. You can write bank also if you want. Unrecorded investments, 1,00,000. If you have space, you can write it in inner column. You will similarly sell land, building, machinery, furniture, stock and collect money from debtors. You can add all of them and then post it to outer column. Yes. Tell something, yeah.
Yes, sir.
Very nice. What do we have? What's the next thing that we can do? Next is one of the creditors agreed to take over some items of furniture of book value 1,00,000 at rupees 96. So there is one creditor to whom I should pay money. He is like, don't worry, you might be finding it difficult to sell your assets and then give me money. Instead of you selling the assets and give me money, give me your assets. So it took what? It took our furniture. Furniture is going out. Furniture should be credited. Trade creditors is decreasing. Creditors should be debited. Can I say the journal entry is creditors account debit to furniture? Yes. Creditors liability decrease debit. Furniture asset decrease credit. Here creditors illa, furniture illa. Why? Creditors is already closed by transfer to realization. Furniture is also already closed by transfer to realization. So creditors account will be replaced by realization. Furniture account will be replaced by realization. Journal entry is realization account debit to realization. Is that even a journal entry? Chichi. So don't write. You understood why? But remember, yeah, 1,00,000 is the value of the furniture. It is taken over at 96. Sir, 4,000 loss. 1,00,000 rupees worth of furniture is agreed to take it over at 96,000. 4,000 loss. Where will profit or loss go? Sir, P&L. Hey, if there was P&L balance in liability side, we would post it to partners capital. In dissolution, I told you, any expense or any income will be written through realization. Here that profit or loss also should be written to realization. So basically no journal entry. If one asset is taken over by one liability and they get knocked off, realization account debit to realization account is the entry. Even if there is profit or loss, that would also go to realization account only. So basically there is no journal entry. But remember one thing, yeah, creditors is not fully written off. How much is our trade creditors in the balance sheet? It is 4,96,000. In 4,96,000, we have given our furniture to settle only 96 worth of creditors. Still 4,00,000 worth of creditors is balance. Hana kodbek pending is there. Got it? Furniture also, we had furniture worth of 4,20,000. In that 1,00,000 worth of furniture gone, 3,20,000 worth of furniture is still remaining. Maybe we will sell it. Did you get this? Basically, when a liability takes over an asset, there is no journal entry. If there is profit or loss on such takeover, for that also there is no journal entry. Ignore it completely. Got it? Then, rest of the creditors were paid at 5% discount. See, remaining creditors are taking rest. No, remaining creditors are paid at discount of 5%. Creditors is 4,96,000. In that 96,000 settled by taking over furniture. 4,96,000 96 minus madre, what is remaining? In this 4,00,000, we will give them discount of 5%. 5% is type 20,000. 3,80,000 is the cash that we pay. There is no journal entry for this 20,000 also. Why? Expense, any income should be routed through realization. Here creditors is also realization. that creditor should be debited because it is decreasing by 20. Credit to discount, which is also realization. It will become realization to realization. No entry. Entry is only for this payment of 3,80,000. What is the journal entry when you pay? Expense or liability account debit to cash. Here the liability name is creditors. Entry would be creditors account debit to cash. Cash. Creditors account debit to, but you will not write creditors, you will replace it with realization. Entry is realization account debit to cash. In cash account, I'll write by realization, trade creditors, we paid 3,80,000, we've done working. Got it? In my realization account, I would write on the debit side, to cash, trade creditors, working note ಮಾಡಿದ್ವಿ 3,80,000 is the amount paid. Suddenly you should not get doubt, how did we get 3,80,000? So we've done working note number 1 there. Okay, what's after that? This out of trade debtors, 36,000 is proven bad. Remaining were fully realized. How much is our debtors here? 6,20,000. In that, how much is bad? 6,000. Remaining is good. Correct. Out of total, if I remain bad, good. Good means they're giving money. Okay, so from 6,24,000, you deduct 36. Do 6,24,000 minus 36. 5,88,000 is the money received. When you receive money, bank account debit. Credit will be debtors. Usually the journal entry would have been cash or bank to debtors. But you will write cash or bank to realization. Because debtors is already closed by transfer to realization. In realization account, I write by cash. In cash account, I'll write to realization. Trade debtors, 5,80,000. You can write separately to realization 10 times. I'll write to realization 1 time, underline and write all the items. Okay, now after that we have other assets was realized as under. Entry is simple, cash account debit to realization. Cash account debit to, in cash account I'll write on the debit side to realization. In land and building, how much land and building? 21 lakh. Then machinery, 6,80,000. Then furniture, some furniture is taken over by that part, creditors. Other than that, balance furniture remaining was taken over by X. Are we selling? X is taking over. If we sell it, journal entry is cash account debit to furniture. If Mr. X takes over, partner X account debit to furniture. Partner X account debit to, for one moment, keep this pending. On the floor, write stock here. Stock realized 2,40,000. Here in cash account, we return to realization. In realization account, you write by debtors, by land, by machinery, by stock. Right here, by land and building, machinery, stock, and that's it, no? How much? Land and building, 21. Machinery, 6,80,000. Stock, 2,00,000. We return debit in cash, credit in realization. Now see this furniture. Furniture is reducing. Credit. Who's taking over? Partner. When partner takes over, you are supposed to give him cash. If he takes over furniture, that is settlement of his capital. His capital will reduce. When the capital reduces, what do? Debit the capital account. Entry is capital account debit to realization. Capital account debit to. So in my realization account, I will write by X capital account. Furniture taken over. How much did he take over? 3 lakh. Remaining furniture is taken over at 3 lakh. Don't try to identify profit or loss on such furniture. Why? Profit or loss will automatically be found in realization. Don't worry. So I wrote in realization by X capital. In X's capital account, debit side I'll write to realization, furniture taken over by X, 3 lakh. Okay, now what's after this 3 lakh? Is stock also over? Everything is over in this table. Fifth adjustment, expenses of dissolution, 74,800. What is the entry when 74,800 is paid towards expenses of dissolution? Cash should be credited. Amount is paid. Cash account credit. Realization account debit. Realization account debit to cash. Realization account debit to cash. In realization account, I'll write to cash. Dissolution expenses. How much? 74,800. In realization, I wrote to dissolution expense. This to cash. In cash account, I'll write dissolution expenses under by realization, 74,800. Got it? Not over. We still have one adjustment. There are outstanding bills for repairs, 14,000. We had an unrecorded asset that we sold. we have an unrecorded liability that we are paying. How much? 14,000. This unrecorded liability of 14,000 paid. Journal entry will be realization account debit to cash. I'll write outstanding bills for repairs. How much? 14,000. In realization account, I wrote to cash. In cash account, I'll write by outstanding bill for repairs 14,000. Done. Allige, question is over. We'll just check once whether all the assets are sold, whether all the liabilities are settled. Assets, land and building, machinery, furniture, stock, debtors. Land and building, machinery, furniture is slightly taken over and slightly taken over by creditors, slightly by partners, slightly by creditors. Stock over, debtors over. So all assets what we have debited have been sold. Liabilities nodi, employee provident fund. Pay ಮಾಡಿದೀವಾ? We should assume that it is paid now. Trade creditors. Now that is settled. So what should we pay? Employee provident fund. How much is there in employee provident fund? When you pay this liability, what is the entry? Provident fund account debit to cash. But provident fund account is already closed by transfer to realization. So entry will be realization account debit to cash. What is the amount? Employee provident fund 2 lakh. In realization account, you wrote to employee provident fund. In cash account, I'll write employee provident fund paid 2 lakh 40. Everybody got this?
Yes.
Ready, pa?
Yes.
Paka. Nice. What's next? Everything's over, yeah. All assets are sold, all liabilities are sold. Everything's done. Identify realization profit or loss. Transfer it to partner's capital. Whatever is the balancing figure in partner's capital will be equal to the cash available. So what if cash available is less? Then the loss would become more here. So it's all connected by way of double entry. Check which side total is more. I think there is profit. Credit side total is more. 240 plus 496 plus 120, 588, 21 lakh, 6 lakh 80, 2 lakh 40 and 3 lakh. What do we get? 47 lakh 64,000. Write them and identify the balancing figure. 47 lakh 64 minus 1940, 752, 420, 223, 200, 624, 380, 74, 800, 14 and 2 lakh 40. 96,000. This will be shared between partner X, partner Y, partner Z. Sorry, realization profit. In the ratio 3 by 6, 2 by 6, 1 by 6. 3 is to 2 is to 1 in their ratio. This in the beginning of the question. See, 3 is to 2 is to. Share it. What do we get? 45 plus 3. 48. Oh, sorry. 2 by 6. And 1 by 6. How much? 48, 32 and 16. Together 96. In realization, I have written two partners capital. In partners capital account, I would write by realization account. Am I right? How much? Yeah, by realization. Realization profit. 48, 32, 16. 48, 32 and 16. Got it? Really, pa?
Yes.
Say something, yeah. What's after 48, 32 and 16? Then realization account is closed. Am I right? Partners capital account, find the balancing figure as partners profit or loss. I'm going to say basically the balancing figure. Cash settled. 1420 plus 13 plus 48. 1720 plus 48 is 17 lakh 68,000 minus 3 lakh.
14 lakh.
14 lakh
68,000.
14 lakhs. Here 880 plus 2 plus 32. 11 lakh 12,000. 11 lakh 12,000 will be kept. Here 5 lakh plus 1 lakh plus 16. 6 lakh 16. 6 lakh 16. This total whatever is there, no, this is the cash paid to partners. We should have so much cash. We cannot have less, we cannot have more. It's all connected. Cash will come from sale of assets. If the asset is sold, we would have written in realization. If it is sold for more, we would have got profit. If it is sold for less, we would have got loss. If it is profit, amount payable to partner will increase, cash available will increase. If it is loss, amount payable to partner will decrease because cash available is less. It's all connected. It's not magic. Don't do magic, it's tallying. No magic, yeah. Take the total. 1468 plus 11 lakh 12 plus 6 lakh 16. What happened? ಹಾಗೆ ಬರ್ಬೋದ್ರಾ ಇರ್ಲಿ. In partners capital account return to cash. In cash account write partners capital account X, Y, Z. Same 1468, 11 lakh 12, 6 lakh 16. Putting it together 31 lakh 96. Now check the total. Will it tally?
Yes.
Yeah, at 39 lakh 4,800. Let's now solve question 4A from our April 2025 mock paper. This question is on admission of a partner. Let's begin. We have with us alpha and beta are partners sharing profits and losses in the proportion 3/4 and 1/4 as at 31st of March 2025. They have given balance sheet. See what is the data given after that. There is one goodwill adjustment. One of the partner is getting admitted, gamma. He'll bring in some capital for 1/5 share. Stock and furniture have adjustment. So the stock value, there is an adjustment. Furniture value, there is an adjustment. Then provision has to be created for doubtful debtors. So debtors also has an adjustment. Then next I have is building value will change. I'll mark land and building also. Then in the next adjustment, they're telling us that capital account should be in that ratio. And if there is any excess or shortage should be adjusted through current account. We can do that. They want us to do revaluation and partners capital. Oh, they have not asked us to do balance sheet. It's only revaluation, partners capital. But we might have to do one table for ratio adjustment, one table for goodwill adjustment, and one table for capital adjustment. 3 working notes would be there in this question. Let's begin. Shall we? To begin with, I will take my capitals, alpha and beta. Okay, I'll take a different color for marking the items. That's done. Okay, alpha 8,55,000, beta 4,65,000. This would go to my partner's capital account on the credit side. In my revaluation account, I won't write any of it. In partner's capital, I'll write on the credit side by balance. How much is that? 8,55,000 for alpha, 4,65,000 for beta. After alpha and beta's capital, general reserve of 1,80,000. This will be shared between partners in their profit sharing ratio. Old partners, old profit sharing ratio. 1,80,000. I would write here by general reserve. What is your old profit sharing ratio? 3/4, 1/4. 1,80,000 into 3/4, 1,80,000 into 1/4. So that would be 1,35,000 and 45,000. General reserve is decreasing. Debit general reserve, credit partners capital account. Got this? What's next? We have creditors. Creditors would appear in balance sheet, which you are not preparing. Leave it. Come to asset side. Land and building will go to balance sheet. Office furniture will go to balance sheet. Sundry debtors will go to balance sheet. Stock will go to balance sheet. Bills receivable will go to balance sheet. Cash in hand, cash at bank will go to balance sheet, which we are not preparing at all. Ignore. Revaluations have to be taken care, but that will do when we read adjustment, not right now. Next, we have with us Gamma joining the partnership form on 1st of April. Welcome Gamma with a round of applause. Welcome Gamma. Then goodwill is to be valued at 6 lakh. And Gamma is unable to bring cash for its share of goodwill. Because Gamma is unable to bring cash, it will be taken from Gamma's capital. If they don't tell anything, we'll take from Gamma's capital. If they tell specifically, we'll take from Gamma's current account. Here they've told to take it from Gamma. See? So it was decided to due credit of goodwill for alpha and beta in favor of sacrifice by Gamma. Sorry, in the favor of sacrifice for Gamma made by alpha and beta from current account. Same, yeah. Draw the same table, write alpha, beta, gamma. Credit goodwill to old partners in old profit sharing ratio. Debit goodwill to new partners in new profit sharing ratio. When you adjust, wherever you write gamma account, write it in current account. Don't write it to gamma's capital. I'll explain it to you. How much does gamma come for share? Gamma pays 4,20,000 for 1/5. I'll deal with 4,20,000 later. Right now, focus on 1/5. So we need to do ratio computation now because we don't have the ratio. Observe, old ratio 3/4, 1/4. New ratio, gamma gets 1/5. When gamma gets 1/5, balance is 4/5. We cut the cake into 5 parts. Gamma takes 1 out of 5. How much is left? 4 out of 5. This 4 out of 5 will be shared between alpha and beta in their same ratio. 3/4, 1/4. So I'll do 4/5 into 3/4, 4/5 into 1/4. 4 in the numerator, 4 in the denominator will get cancelled. It will be 3/5 and 1/5. So what is their new profit sharing ratio? It is 3 by 5, 1 by 5. I'll mark it with bold. 3:1:1, yeah. 3:1:1 is the new profit sharing ratio. Old profit sharing ratio, 3:1. You guys get this? We'll credit goodwill to old partners in old profit sharing ratio. How much is goodwill? 6 lakh. 6 lakh into 3 by 4, 6 lakh into 1 by 4. How much is that? 6 lakh into 3 by 4. 4 lakh 50,000 credit and 1 lakh 50,000 credit. Am I right? Then same goodwill will be debited to new partners in new profit sharing ratio, which is 6 lakh into 3 by 5, 6 lakh into 1 by 5, 6 lakh into 1 by 5. How much is 6 lakh into 3 by 5? 3 lakh 60,000. 6 lakh into 1 by 5? 1 lakh 20. And here also 1 lakh 20. This 4 lakh 50 credit and 3 lakh 60 debit. What is remaining? 90,000 credit. You guys got it? 1 lakh 50 credit, 1 lakh 20 debit. 30,000 credit. And here though it is 1 lakh 20,000 debit. Everybody got it? Entry will be Gamma capital account debit 1 lakh 20. But they've clearly mentioned here to use Gamma's current account. So we'll write Gamma's current account debit 1 lakh 20. Then the credit will be given to Alpha's capital account, to Beta's capital account, 90 and 30. This is the journal entry for 2 tables out of 3 working notes is over. Only one more working note is pending, that is capital. Did you all get this? Very nice. So what is the entry? Gamma's current account debit to Alpha's capital account to Beta's capital account. Gamma's current account is debited by 1 lakh 20. This you write in balance sheet asset side. Why? Gamma owes the firm 1 lakh 20,000. To the firm it is an asset. He has to bring in goodwill, no? He's not got it. So we'll debit his capital account. But they told don't debit capital. Write it as current. Why? If you debit his capital, capital will come down. Capital should be in PSR. Capital cannot come down. Share rate 1 lakh 20 in current account balance sheet asset side. Balance sheet marta illa. You are not doing, so it will not be written. Whereas this Alpha and Beta's 90-30 credit, I will write it in their partner's capital. By Gamma's current account, goodwill adjustment, Alpha 90, Beta 30. Understood? I would have written 1 lakh 20 debit here, but I don't want. Why? The capital should be same. Now see the next adjustment. Gamma pays 4 lakh 20,000 towards capital. When he brings in capital, entry is cash account debit to Gamma's capital. In capital account, I'll write by cash 4 lakh 20. I should have written this to cash. So in cash account, I was supposed to add, which will eventually go to balance sheet. We are not doing it. We are not doing it. Ignore. Ashta. So ratio is 3:1:1. Capital of Gamma 4 lakh 20. They've told capital should be in this ratio. They've told capital should be in this alva. 5:5 is the total ratio. For 1 out of 5 parts, it is 4 lakh 20. What would be the total share of the total capital in the firm? There is one cake which is cut into 5 parts. One piece is 4 lakh 20. Full cake is how much? 21 lakh. 21 lakh is the total capital of the firm. How much should be Beta share? 21 lakh into 1 by 5. How much would be Alpha share? 21 lakh into 3 by 5. That will be 12 lakh 60 and 4 lakh 20. This has to be balance carried down. This has to be balance carried down. If there is shortage, then they would have to bring money. So what do? This 12 lakh 60 and 4 lakh 20 now. I would write in my partner's capital account on the debit side. I would write here balance carried down. 12 lakh 60 for Alpha, 4 lakh 20 for Beta, 4 lakh 20 for Gamma. If there is any balancing figure in Alpha and Beta's column, it should be through current account. Sir, Gamma should not change. That is the reason goodwill adjustment also we wrote it to current account. Got it. Gamma's capital, he bought in 4 lakh 20, it will remain at 4 lakh 20. Any other adjustment in the question? Yeah. Stock and furniture to be reduced by 10%. How much is stock value? Stock is 6 lakhs. Reduce it by 10%. Loss alva, revaluation account only debit. Revaluation account debit to stock, 6 lakh into 10%, 60,000. Furniture, 30,000 into 10%. Revaluation to furniture, 3,000. Understood? What do we have next? Stock over, furniture over. Come to fourth one. A provision of 5% for provision for doubtful debts to be created on debtors. Yesterday debtors, Debtors, my friend, is 4 lakh 80. Do 4 lakh 80 into 5%? 24,000. In our revaluation account, I will write debit side to provision for debtors. 4 lakh 80 into 5%. How much is that? 24,000. And this will be deducted from our debtors in balance sheet, which you are not preparing. I would have written it in debtors minus. All like incomplete records. No, half of questions there was. It's okay. Be ready for it. What's after this? 24,000. Next. Land and building to be appreciated by 20%. Yes, profit. In revaluation account, credit side. By land and building. Valuation. Land and building is 7 lakh 50. Apply 20% on that. 1 lakh 50. Did you guys get this?
Yes.
It is 7 lakh 50,000 into 20%. Everybody got? What's after this? That's it. Everything's done. This capital accounts also have been adjusted. Close revaluation, identify profit or loss, put it to partners capital account. Ashte. Don't even go to balance sheet. Come on. 1 lakh 50. 84 plus 3, 87. So there is revaluation profit. Yeah. 150 minus 84 is 63. Share it between old partners alpha and beta in the ratio 3 by 4. 63 into 3 by 4, 63 into 1 by 4. What do we get? 47,250 and 15,750. I would write this in my partner's capital account on the credit side as by revaluation account. 47,250, 15,750. Find the balancing figures. That will be current account of alpha and beta. Gamma column will anyways get closed. Check the total in alpha. 855 plus 135. So 880, 890, 990, 990 plus 90, 1080, 1080 plus 47, 230. No, 9, 10. Hey, 12 lakh 60 minus this. 1 lakh 32,750. And beta here 4 lakh 20. The credit side is more. 465 plus 45. 470, 510, 540, 555, 750 minus 420 will be 1 lakh 35,750 current account. So when we prepare balance sheet, on the liability side we'll write beta's current account 135,750. On the asset side I'll write alpha's current account 132,750. But we are not preparing balance sheet in this question. So our answer ends here. Got it? That's it for 4A. Let's now solve question 4B from our April 2025 MTP. This question 4B is on incomplete records. Let's begin reading. Mr. Chetan carried on business as retail merchant. Is not maintained regular accounts book. So we have two options. One, statement of affairs method. Two, conversion of single entry to double entry. Conversion to double entry system. So he always maintained 40,000 in cash and deposited the balance in bank account. So always the cash balance is 40. Opening cash balance 40, closing cash balance 40. If there is any balancing figure in cash column, it will be cash deposited into bank. Got it? Then they've told us that GP is usually 25% on sales. When they're telling all of this, they want us to do trading P&L balance sheet. However, let's see the end of the question. What do they want us to do? They want us to do trading and P&L followed by balance sheet. Shall we begin?
Yes.
Okay, start with the answer. I'll write trading account, P&L account and balance sheet format. In my trading account, I would write my GP to gross profit carried down as 25% on sales. How much is it? I don't know. If I get to know sales, I will find GP. If I get to know GP, I will find sales. Both are interrelated. Next, I also know that cash balance will be 40. In my balance sheet, I can very comfortably write cash in hand as 40. Why? If there is anything in more than 40,000 in hand, no, that will be deposited into bank. I'll prepare two balance sheets. One is closing balance sheet, other one is opening balance sheet. Opening balance sheet is on 1st April, closing balance sheet is on 31st March. In the opening balance sheet, I'll find capital fund as balancing figure, which will go to closing balance sheet inner column. To that, I will add net profit, deduct net loss if there is any, deduct drawings, add additional capital to find the closing capital balance. I hope everyone got it. By this, we're done with this first paragraph. Next we have here cash in hand. See, already taken care of. Yeah, 40, 40. There are a lot of cash transactions also given here. So we'd have to open one cash ledger. I've prepared two columns, cash and bank together. If you want, you can write cash separately, bank separately. I would write here balance brought down 40, balance carried down, cash is 40. Understood? What is the next item? We have sundry creditors. Sundry creditors, opening 1,60,000, closing 3,60,000. I would have to write it in my respective balance sheet. In the opening balance sheet, I will write sundry creditors 1,60,000. In the closing balance sheet also, I will write sundry creditors 3,60,000. I will still prepare a ledger. Why? I know opening, closing. They would give me details of payment to creditors. I will eventually find purchases. Objective of opening creditors account is to find purchases. Creditors is a liability. Opening balance on the credit side. Buy balance brought down 1,60,000. Closing balance on the debit side. To balance carried down 3,60,000. Buy balance brought down 1,60,000. To balance carried down 3,60,000. Understood? What is after this? Creditors. Then we have cash at bank. Opening cash balance 2 lakh. Hey, but it is credit, meaning bank overdraft. Bank OD. I will write in my bank account on the credit side. How much is it? 2 lakh. And I'll write closing balance. Closing balance is positive. How much? 3,20,000. Did we write creditors in respective balance sheets? Creditors? Yeah. Bank Paryanaiga. Opening balance of bank will appear on the liability side because it is overdraft. How much?
2 lakh.
2 lakh. Closing balance of bank will appear in the balance sheet on the asset side. How much is it?
3 lakh.
3 lakh. Are you guys getting it? Very nice. What's after that? We have debtors. Debtors opening 4 lakh, closing 14 lakh. In my balance sheet, closing balance sheet, I'll write 14 lakh. Opening balance sheet, I'll write debtors 4 lakh. And they both will appear in our sundry debtors ledger. To balance brought down 4 lakh by balance carried down 14 lakh. Easy. Next we have stock in trade. Trading account. Opening stock 11,20,000. Closing, they haven't given. We know relationship between sales and GP. We'll find closing stock as balancing figure for a change. Let me write a stock in my opening balance sheet. How much is stock opening? 11,20,000. Opening balance sheet. Closing balance sheet also will have stock. How much? We don't know. Then I'll take you to my trading account. In the trading account, I'll write opening stock of finished goods 11,20,000. Closing stock of finished goods, we don't know. We have to figure this out. I think we'll find sales from debtors account, put it here. We'll find purchase from creditor account, put it here. On the sales, I'll find GP. So in my trading, I'll know opening stock, purchase, GP, sales. I'll find closing stock as balancing figure in trading account, which will go to my balance sheet asset side also. Understood? What's after this? Closing stock adjustment done. Analysis from bank passbook reveals the following. Remember the word, this is all transactions where bank passbook. Because these transactions are happening in passbook of the bank, these are all items that would appear in column. Which column? Bank column, cash column. Bank column of cash. Which column? Bank column of cash. So the first thing that we have is payment to creditors 28 lakh. So in my creditors account, I would write debit side to bank account. How much is paid? 28 lakh. In creditors column, I wrote to bank. In bank account, I would write by creditors 28 lakh. Next, payment for business expenses 4,80,000. Expense account debit to bank. Expense of 4,80,000 will appear in P&L account. Come to profit and loss account. This is my P&L. On the debit side, I will write two business expenses 4,00,000. Paid. So in bank account, I will write it as payment. Come to bank account, cash and bank. Here I would write by business expenses 4,80,000. You understood? In our cash and bank, I wrote it as expense by business expense 4,80,000. In my P&L account, I wrote debit side two business expenses 4,00,000. Got this? Then we have with us receipts from debtors 30 lakhs. When you receive money from debtors, entry is bank account debit to debtors. In bank account debit side, we'll write two debtors in bank column 30 lakhs. This is received from debtors. In debtors account, I would write credit side. By bank account, 30 lakh. Did you guys get this? What's next? We have loan from Gaurav, 4 lakh. You have taken loan from Gaurav. Cash comes in. Bank account debit to Gaurav. Bank account debit to Gaurav's loan. So in the bank account, I will write receipt side or debit side to loan from Gaurav or Gaurav's loan, 4 lakh. Got it? And this loan is there. No, it's a liability. Liability will be written in balance sheet. On the liability side, Gaurav's loan, 4 lakh. Artha aita? What is the interest rate on this? 10%. Loan is taken on 1st of October, not on 1st of April. So if you have to compute interest, you should do it from 1st of October to 31st March. October, November, December, January, February, March. How many months? Compute 6 months interest. 4 lakh into 10% into 6 by 12. How much? 20,000. Have they told it is paid? If it is paid, it would have appeared in past. It is not paid, so it is not appearing in past. It will be expense in P&L. It will not be payment in balance sheet. It will not be payment in bank account. It will be balance sheet liability. Shall I write it? If it is paid, they would have given in that statement. Passbook alli illa. So it is not paid. Outstanding interest on loan is how much? It is 4 lakh into 10% into 6 by 12. How much is the amount? 20,000 is liability because it is not paid. 20,000 is expense. I'll write interest on Gaurav's loan 20. It could have been written in bank account credit side or cash account credit side also alternatively. But they've told it's not paid. Hey, again, they have given all payments. They've given all payments in passbook. It is not there. So it is not paid. What do we have next? Cash deposited in the bank, 4 lakh. Contra entry. Bank balance will increase. So in bank column, debit side. How much? 4 lakh. In cash column, it will decrease. Credit side. Cash credit, bank debit. Cash ali credit side, bank ali debit side. Both debit and credit are reflected in the same ledger, cash and bank account. So we would call it contra entry. If there was journal folio that I had prepared, and if I had drawn ledger folio calling it my subsidiary book cash book, then I would have written alphabet C there. But this is not subsidiary book. This is ledger. So here there will be journal folio, not ledger folio. Understood?
Yes.
What's next? He informs you that he paid creditors 80,000 in cash. Okay. In cash account, I'll write credit side by creditors, alva. Sorry. Creditors. How much did we pay to creditors? 80,000. He paid 80,000 to creditors in cash. Entry is creditors account debit to cash. In cash account, I wrote by creditors. In creditors account, I'll write to cash 80. You paid 80,000 rupees cash to creditors. Aita. What's next? Then salaries 1,60,000 in cash. What is the entry when you pay salaries? Salaries account debit to cash. Am I right? In cash account, I will write here by salaries. How much is that? 1,60,000. Correct? Correct or not? Salaries is expense. It will appear in P&L. Statement of profit or loss. Sorry, trading and P&L. Right here to salaries 1,60,000. Did you all get this?
Yes.
What is after this? During the year, Chetan had not introduced any additional capital. So, in cash account, there cannot be any inflow. In cash account, there cannot be any inflow. They have told surplus cash, if any, has to be taken as cash sales. In cash account, no. Any balancing figure that is there will be sales. Goods are sold, cash is received. You could have alternatively assumed it to be additional capital. So they told there is no additional capital. Chetan does not have money to bring in as additional capital. Any money that is come in is sales. Take the balancing figure in cash column. There is drawings. Oh, all purchases were made on credit basis. Where did we read? Oh, sorry. He has drawn 3,20,000 towards personal expenses. So I will write here by drawings. It is withdrawn in cash. 3,20,000. In cash column, I have written by drawings 3,20,000. This will reduce my capital. In the balance sheet, capital which I don't know, which I'll find it from my opening balance sheet. From that, I will deduct drawings of 3,20,000. Later, if there is net profit, it will be added. If there is net loss, it will be deducted. Okay, da. What's after that? All purchases were on credit. Before that, we'll find cash sales. Identify balancing figure here. It will come here as sales. 80 plus 4 lakh, 480, 540, 640, 640, 960, 960 plus 40, 10 lakh. 10 lakh minus 40 is 960. 960 is cash sales. Artha aita? This is not total sales. Why? We have debtors account. Here we'll find credit sales. When? Later. For now, in your trading account, write in inner column. Cash sales 9 lakh 60. Credit sales, we will find it in debtors account. Understood? Anything else in the question? All purchases were made on credit. There is no cash purchases. If there was cash purchases, cash should have been paid. In cash column, there should have been payment. It's not there. So that's the reason they've told all payments were, all purchases were on credit. Sir, what if they purchased goods for cash immediately, but they paid later? Adanne credit purchase another. Understood? So there is no credit purchase, there is no cash purchase. Got it? That's it. Anything else left in the question? We'll close one ledger at a time. This balance sheets will close later. Trading P&L also later. Come to working note. This cash account is closed. Bank account, check the balancing figure. Is there anything? It should match. If there is any mismatch, then that will be some missing payment or receipt. 38 lakh banta ikkada. Ikkada eshtiದೆ ನೋಡಿ. 28 plus 2, 30. 34, 37, 38. It will match. So there is no receipt or payment missing. Why? They have given us opening balance of bank, closing balance of bank. Passbook copy they have given. So how can any amount be missing? Understood? Come to creditors. Creditors, opening is there, closing is there, payment is there. Balancing figure is goods purchased on credit. What is the balancing figure? Goods purchased on credit. How much is it? 28 lakh plus 80,000 plus 3 lakh 60. 32 lakh 40. 32 lakh 40 minus 1 lakh 60. 30 lakh 80. Got it? In my creditors account, I have written buy purchase 30 lakh 80. Am I right? In my trading account, I would write here debit side to purchases credit only 30 lakh 80. Sir, cash purchase illa country. It's not there. Understood? What's next? We closed cash and bank. We closed creditors. Come to debtors. Last ledger. Debtors 30 lakh plus 14 lakh. 44 lakh. 44 lakh minus 4 lakh. Sales is 40 lakh. 40 lakh sales. In trading account, I would write credit side. Sales as 40. 40 plus 960. 49 lakh 60,000 is total sales. Sir, we don't know GP. We don't know closing stock. 49 lakh 60 total sales. On that, apply 25%. Apply, yeah.
By that 40,000.
Sales is 25% of 49 lakh 60,000 is our GP, which would be 12 lakh 40. Trading account credit side to GP. P&L account debit side, credit side by GP bottom 12 lakh 40. Don't go to close P&L. First identify closing stock as balancing figure. 11 plus 30, 41, 43, 44, 44, 45 lakh 40,000. 54 lakh 40,000 is our total here. And from 54 40 deduct 49 60. 44 lakh 80. 4 lakh 80 is our closing stock. Is this right?
Yes.
Yeah, sorry. 4 lakh 80 closing stock will appear in balance sheet. Stock in trade, closing balance sheet, 4 lakh. Got it?
Yes.
GP over. Now identify net profit. 12 lakh 40 is the total. 480 plus 25 lakh. 6 lakh 60 over there. 3 lakh 60 plus 40. 4 lakh. 5 lakh 80.
5 lakh.
Sorry. 5 lakh 80 is net profit. Add it to capital. Additional capital illa. Net profit 5 lakh 80. Sir, we don't know opening capital. Don't worry. We'll close opening balance sheet first. How much? 40 plus 4 lakh plus 11 lakh 20. 15 lakh 60
Yes.
minus 3 lakh 60. 13 lakh Allah. 12 lakh. 12 lakh is opening capital. Right? 12 lakh here. Do minus 3 lakh 20 and plus 5 lakh 80. We'll get closing capital. Do it.
40 lakh.
14 lakh 60. Add 3 lakh 60, 4 lakh and 20,000. What do you get?
22 lakh 40,000.
22 lakh 40, 22 lakh 40. Balance sheet tally. Got it? Let's now start discussing question number 5A from our April 2025 mock test paper issued by ICAI. This question 5A is from the topic of rectification of errors, which is part of our accounting process chapter. Let's start reading the question. The question says that Messrs. Viva Garments Wires were unable to agree the trial balance. So they've already prepared trial balance. This cannot be stage 1. This cannot be before trial balance. Sir, is this stage 2 that is after trial balance? As of now, it is after trial balance. But if they're trying to do rectification in the next year, it will be stage 3 after final accounts. So now we know only fact that it is not before trial balance. Read further. As on 31st of March 2025, that is at the end of the year, have raised suspense account for difference. Very good. You might think, what nonsense is this? Sir is telling very good for everything. It's a very good thing that they've transferred to suspense. We've done questions in the past and questions have been asked in the past wherein the difference arises in trial balance. By mistake, instead of transferring to suspense, they've transferred to PL. You get it? So here they've done the right thing. They've transferred it to suspense. So all our one-sided journal entries, what we rectify, will be rectified through suspense account. Read further. For the difference, next year, very important part is this. When are they rectifying the errors? Next year. So this is stage 3 rectification. Errors identified and rectified after final accounts. What is the significance of this word next year? Very simple. Whenever we pass any rectification entries, if in case the rectification entry has any item which affects profit or loss, like purchase, sale, purchase return, sales return, any expense or income, these items will be replaced with profit and loss adjustment account. So remember cautiously, pass journal entry as usual. If the journal entry has any item like purchase, sale, purchase return, sales return, any expense or income, it will be replaced with profit and loss adjustment account. Shall we begin? Additions to machinery, very good, made during the year. Basically machinery purchased. The journal entry should have been machinery account debit to cash, was wrongly debited to repairs account. They purchased machinery. It's a capital expenditure. They should have added to the cost of machine. They were wrongly returned to repairs. Repairs is an expense. Expense will go to PL. By mistake, this expense has gone to PL. The correct journal entry, better, we'll start from wrong. Wrong journal entry that they've passed is repairs account debit to cash, which is incorrect. We should reverse. Cash account debit to repairs. Correct journal entry is furniture account debit to cash. So what should we do? Reversal of the wrong entry plus the correct entry should be added. Furniture was wrongly debited. Machinery was supposed to be debited, not debited. We will debit now. Repairs was wrongly debited, credit now. Can I say the journal entry is machinery account debit to repairs account? But repairs is an expense. I'll replace repairs with P&L adjustment. This is our first one. Amount is 1,12,500. Now I've written repairs and then scratched it so that you get to know what was there in the place of P&L adjustment before it became P&L adjustment. However, when you write this in the exam, you can straight away write machinery to P&L. You don't have to replace it with repairs. Got it? Read the next adjustment. The addition to freight column in the purchase journal was excess by 13,500. Freight is an expense. We should have written the entry freight account debit to cash. That column will be totaled and posted to cash account credit side. But what have they done? They've done it correctly, but they've done excess by 13,500. If the amount is 10, they've written 10 plus 13,500, 23,500. Freight has been incorrectly increased. We should decrease freight. Freight is an expense. To increase, we'd have to debit it. To decrease, we'd have to credit it. It is incorrectly been increased by debiting. I will credit it now by writing freight account 13,500. Sir, debit will be suspense because it's a one-sided error. There is no error in cash book. Have they told error in cash book? Sir, can I assume that it is an error in cash book? errors will not be assumed. Errors have to be told. If you assume, no, it is written in cash book. Assume in cash book it is written on credit side. Assume it is written in cash book on debit side. Assume that it is written at 23,500. Assume it is written as 26,000. If you start doing assumptions, there is no end. Assumption will be made only if it is necessary. And an error in rectification of errors will never be assumed. Only if they tell that there is an error, there is an error. If they don't tell anything, there is no error. It is not a crime till you are caught. So it is not an error till it is disclosed. Write it here. In the place of right, I will write P&L adjustment because this is an item affecting profit and loss statement. It should be replaced with P&L adjustment as the errors are rectified after final accounts. Are we good to go to third one? See the third adjustment. Goods to the value 9,450 returned to Ray and Company. It is returned to. So we are returning. Previously we had purchased. Now we are returning it. This is purchase return. When we purchase the goods, entry is purchase account debit to Ray. When we return the goods, entry is Ray account debit to purchase return. Goods are going out. Purchase return account should be credited. Purchase return account should be credited. Read further. Had been posted to credit of Ray account. Correct. Sorry, wrong. We should have not credited purchase. We should have not credited Ray account. We should have debited Ray account. Entry is Ray account debit to purchase return. Have we debited Ray account? No. We have credited it. Now we have to debit Ray account. Why? Sorry, once again. Goods to the value 9,450 returned to Ray and Company. When we return to Ray and Company, goods are going out. Goods credit. Ray account should have been debited. Oh, they've wrongly credited Ray. So what should we do? We should debit Mr. Ray.
Yes.
Am I right?
Yes.
So the debit should not just be to Ray once. I will debit Mr. Ray and Company. Correct, Alva? Has been returned to Ray and Company, has been credited to Ray and Company. Check. We should have debited his account. We have not debited, so I'll debit once. We have wrongly credited his account. To reverse that, I will debit once again. So I should be debiting Mr. A by 9,450 plus 9,450. How much is the amount? 18,900. I'll repeat. We have returned goods to Mr. Ray. Journal entry should have been Mr. Ray account debit to purchase return. We were supposed to debit Mr. Ray. We have incorrectly credited. Wrong credit reverse madake once debit. Right debit because it is not recorded. Debit once again. So debit twice. That will be Mr. Ray account debit 18,900. Purchase return has also been credited. Purchase return should have been credited or debited? Credited. What have we done? Correctly credited. Is there a problem? No. Did you understand? Goods to the value 9,450 returned to Mr. Ray. We have purchased goods from Mr. Ray. Entry is purchase account debit to Mr. Ray. When we return, Mr. Ray account debit to purchase return. We should have debited Mr. Ray. We have not debited. We have credited it, so I'll debit it twice. It is also to purchase return means it is also credited to Mr. Purchase return. Is there a problem with the credit? Credit is absolutely perfect. So here it will be to suspense account. Did everyone understand this? How much is the amount here? Credit. 18,900. Did everyone get this? Yeah, goods returned to Mr. Ray wrongly credited, now rectified. Did everyone get this? Very nice. Come on, let's go to fourth one. What is there in the fourth one? Sundry items of furniture sold for rupees 2,70,000. It is furniture sold, not goods sold. When the furniture is sold, entry is cash account debit to furniture. What have they done? Has been entered in sales. Sure. Cash account debit, there is no problem. They have wrongly credited sales. Should they have credited sales? They have wrongly credited sales. So I will debit sales. Shall I debit sales account? By how much? 2,70,000. And credit should have been given to furniture. They have not credited furniture before. So now I will credit furniture. The wrong entry is cash account debit to sales. Reversal of wrong entry is sales account debit to cash. Correct journal entry is cash account debit to furniture. Cash will get nullified. Rectification entry is sales account debit to furniture. Sales was wrongly credited. I will reverse it by debiting sales. Furniture was supposed to be credited, not credited. I will credit now. And the sales account, whatever is there, should not be used in rectification after final accounts. I will replace sales account with profit and loss adjustment account. That will be 2,70,000. Did everyone get this? By this we are done with fourth one. Shall we see the fifth adjustment? A bill of exchange received from Mayur and Company. So we have received the bill from Mayur and Company. For us it is bills receivable asset. What did we do? This is for 1,80,000 had been returned by the bank as dishonored because I had discounted with the bank earlier. I had given the bill to bank. Banker was supposed to collect the money from my customers. Banker threw the bill back on my face saying that that guy did not pay. What is the entry that I should write? First I'll receive the bill from the banker. Bills receivable account debit. I should give money to bank. I'll write bills receivable account debit to bank. First entry. Second entry. I will throw this bill on the face of Mr. Mayu. Why? He is the one who's the culprit who dishonored the bill. I'm throwing the bill. No. Bills receivable credit. Debit will be Mayur and Company. Am I right? I have written the first entry here. See, had been credited to bank and debited to bills receivable. So I've written the entry for receiving the bill from the bank. Bills receivable account debit to bank. I've written. I should give it to Mayur and Company. That I have not written. What is the entry here? Bill is going out. Credit, bills receivable. Debit, Mayur and Company. So the journal entry should have been Mayur and Company account debit to bills receivable. This is to the extent of 1,00,000. Did you all get this? This is rectification of errors happening after final accounts. Throughout we have used the word P&L adjustment, P&L adjustment, P&L adjustment. This P&L adjustment account has to be closed by transfer to capital account. It is a mandatory entry. We can't skip this. So see the first entry. We have P&L adjustment account credit 1,12,500. Take calculator everyone. Debit will be plus. Credit will be minus. Take minus 1,12,500. Did you do that? Come to the second entry. Again we have credit 13,500. Do minus 13,500 once again. Come to third entry. Do we have P&L adjustment anywhere? No. Fourth entry, we have debit 2,70,000. So please do plus 2,70,000. And this entry though we don't have anything. What do you have on the calculator? 1,44,000 positive. So to close it, I should credit it. I'll credit P&L adjustment account by 1,44,000. And this has to be transferred to my capital account. 1,44,000. Sorry, 1,44,000. Did you understand? This is a mandatory closing entry. Not doing this might make you lose some marks in the exam. In this copy of mock test solutions given by ICAI, in this entry the amount is incorrect because this Mr. Ray and Company entry, rectification entry is also wrong in the answer. So please don't look at the mock test answer. The answer for this third entry is incorrect in the key answers. Yeah? Kindly trust me, this is the correct answer. Come on. Let's now solve question number 5B from our April 2025 mock paper. This is issued by ICAI for May 2025 examination. This question 5B is on the topic of NPO, not-for-profit organization. They've asked Rainbow Limited's income and expenditure, but they've given you receipts and payment. And there is some adjustments with regard to subscription, stock of cosmetics, and amount due to cosmetic supplier, basically creditor. So we'd have to do subscription account, stock of cosmetics account, creditors account. Along with this, the main answer is income and expenditure. So when you're writing the answer, first you will draw the format of income and expenditure account, which is your main answer. This will be supported by three next things. One, subscription, two, cosmetics, three, creditors, and that advance for stationery if there is any. And insurance premium also, there is some adjustment if I'm not wrong. If it is there, we'll prepare. If not, ignore. Oh, that was a different question. Okay. Don't worry. That's not there. Let's begin. To begin with, we have cash of 13,500. This is at the beginning of the year. This 13,500 would have gone to opening balance sheet if we had prepared on the asset side. so that we can find opening capital fund, which will later go to closing balance sheet. But in this question, they have not asked us to do balance sheet. So this 13,500 will be ignored. 13,500 will be, I'll pick the color slightly different to mark this item. Then come to the next item. Subscription account. I have done two subscriptions, 67,500. It is receipt of money. In the receipt and payment account, I have written two subscription. In subscription account, I should write by receipt and payment. Please, 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 please don't do plus minus. Always do ledger account. I'll open subscription account. On the credit side, I would write by receipts and payment. How much is the amount received? 67,500. What is there after this? We have donation 6,750. This donation of 6,750 received can be income, can be capital. Either of it. They should tell what it is. If they mention this donation amount is capital in nature, it will be straight away added to capital fund in balance sheet. Alternatively, if you treat this donation amount to be small amount, petty amount, and you keep receiving these donations regularly, then this donation fund, instead of taking it to balance sheet straight, I can write it in my income and expenditure account. Because they have not mentioned anything in the question, I am assuming it to be revenue in nature. Alternatively, assumption that it is of capital nature is absolutely okay. You would have to state your assumption. I'll also state my assumption at the end of the problem, or I can state it here only. I'll write one assumption. Let's mention here note. In the absence of specific mention, donation of rupees 6,750 is assumed to be revenue in nature, and it is taken to income and expenditure account. Alternatively, it can be assumed to be capital in nature, and in such case, it will be added to capital fund in balance sheet. You don't have to use the exact same language. Something in these lines, if you written, it will be accepted. What I've done is the logical assumption. Alternative assumption might not be 100% logical, but still accepted. And ultimately, there's going to be no impact. If you take in income and expenditure credit side, from here it will become part of surplus, it will go to capital fund and get added. Instead, you can straight away add it to capital fund. That's an option available. Understood this? Let's see what's next after 6,750. Interest on investments at 6% for the year, 4,500. See, this is interest income, 4,500. This interest income of 4,500 will be taken to our income and expenditure on the credit side. That is on the income side. I would write here by interest on investment, 4,500. They have not given us any information. If they would have given us the value of investment, let's say 1 lakh rupees, then I would have computed on 1 lakh 6%. It would have come to 6,000. Then I would have told my income is 6,000, but I have received 4.5. 1,500, which is my income earned but not received, would have been my asset. How much would have taken in my income and expenditure in that case? 6. But here they have not told value of investment anyway. 4,500 is given. My assumption is income is 4,500, received is 4,500. There is no excess received, shortage received at all. Good. Then we have fashion show proceeds 75,750. We've done some fashion show. What kind of NPO is this which is doing fashion show, which is using cosmetics? Okay, maybe empowerment of people who look cute. Whatever. What kind of club, I don't know. 75,750 is my income. They're doing fashion parade. People would come and then watch fashion show. For them, I've charged ticket. It's okay. 75,750, I'll write it as my income. Sir, Samskruti, Sampradaya, adella side itbittu income and expenditure credit money. We're doing accounting. We're not doing protection. Understood this? This is another important thing that you should note. Whenever they give fashion show proceeds, they would have given fashion show expenses also. How much is fashion show expenses? 51,000. Now I can do 75, 750 and 51,000 net off and then write the amount. But I tell you the problem. Lot of times when that corresponding expense is there, you will not be able to identify in a examination mind. So I will tell you, receipt you write income, payment you write expense separately. Don't do net off. Why? See, here receipt is more, expense is less. So 75, 750 minus 51,000 should be written as income. What if expense was more and receipt was less? Then we should have written it on the expense side. Now we are sitting in a class with time left for the exam. We are of sane mind. We can think and write. Exam only hands will be shivering. Brain will be dancing. Then there is a mistake that instead of writing here, you might write here. Instead of writing here, if you write here, no? Then it will become Musannatera Toba. Marks also will be Toba. Don't do this list, okay? Write receipt as income, payment as expense. Separate only. Don't have to do it together. Sir, will the marks be awarded? 100%. Don't worry. That much I can promise. I've written 75, 750 receipt as income. Can I go further? Come back to payment side. Payment for cosmetics 22,500. How much is the payment? Sorry for the small interruption. There was a power cut. Okay, let's see. What else are you doing? Fashion show proceeds 75, 750. I'm done. Come to payment side. Payment for cosmetics 22,500. This is expense. This expense will be written on the debit side. No. Wait. Payment is made to creditors. Payment is made to? I opened one creditors account. In the creditors account, I will write on the debit side. What will I write on the debit side? No, payment is made, no? Creditors is a liability. Yeah, correct. On the debit side, I'll write 2 receipts and payment, 22,500. I have not made cash purchase of cosmetics. I made credit purchase. So I opened a creditor account. The objective of creditor account is to find credit purchases, which I'll put it in stock of cosmetics ledger. In stock of cosmetics ledger, I will identify consumption of cosmetics. That consumption of cosmetics will go to income and expenditure as expense. Alternatively, people write it in the inner column, write opening stock of cosmetics plus purchase of cosmetics minus closing stock of cosmetics. Don't do that inner column plus minus business. Please open a ledger. One for creditors, one for stock of cosmetics. What is next? Honorarium to beautician. The beautician who come and then he painted, for them we are giving some honorarium. This is an expense. It will be written on the expenditure side. I would write to honorarium to beautician 12,000. What is after that? Salaries. We paid salary. To whom? The people who set up the stage, lightman, director, musician, everyone. 27,000. Expense, I will write in the debit side. That is the expenditure side in income and expenditure. Salary 27,000. What do we have after salary 27,000? Then we have sundry expenses. Some other normal operational expenses 1,500. In my income and expenditure, on the expenditure side, sundry expenses 1,500. Rent for building, where we did that fashion show, 18,000. Expenditure, in my income and expenditure, on the debit side, rent for building 18,000. What's next? We have with us fashion show expenses 51,000. In my income expense, I'll write on the expense to fashion show expenses 51,000. What do we have after that? Cash in hand, closing balance 36,000. This will go to balance sheet asset side. Anyways, we are not preparing balance sheet. Ignore this. Come to the data given after that table. After that, receipts and payment. Subscription due means what? We have given them the subscription. They haven't paid us the money. It is service given. Income accrued but not received. Asset. Asset opening balance will be debit side. Asset closing balance will be credit side. Asset of 750 should have been written to opening balance sheet. 3,000 should have been written to closing balance sheet. But we are not preparing balance sheet in this question. We are doing only income and expenditure. I will prepare subscription account no, to determine my subscription income. Sir, why subscription account here? Very simple. Fashion show ಮಾಡ್ತಾ ಇದೀವಲ್ಲ. We are telecasting it on a OTT. For that subscription we are collecting. Like our own channel is there. If you want to watch the fashion parade, then you would have to take our subscription. We have given subscription, they are yet to pay money, 750. I'll take my subscription account and write on the debit side opening balance. Balance brought down. How much? 750 asset opening balance. Closing balance will be balance carried. Subscription account credit side. How much is that? This will be 3000. So 750 debit side, 3000 credit side. Did you all get this? What do we have after this? Then we have subscription received in advance. If the subscription is received in advance, it is liability. It is amount received but service not yet due. 2250 opening balance of liability. Liability opening balance will be written on credit side. 2250. Liability closing balance will be written on debit side. How much? 1500. This is closing accrued income. This is opening accrued income. This is opening pre-received income. Did everyone get this? What do we have after this? Stock of cosmetics. How much is the cost stock of cosmetics? Opening 15,000, closing 10,500. I'll open a separate ledger called stock of cosmetics account. This is an asset account. Opening balance on the debit side 15,000, closing balance on the credit side 10,500. From this creditors ledger, where I know the payment, I will write opening, closing and find purchases balance figure. That purchases will come here. I will then eventually find the consumption of cosmetics, which will become expense. Done. What is after stock of cosmetics? Amount due to cosmetic supplier. 12,000 was the liability at the beginning. 16,500 is the liability at the closing. I'll come to creditors ledger. Credit side, I'll write buy balance brought down 12,000. Debit side, I'll write to balance carried down 16,500. How much is the opening balance of liability? 12,000. How much is the closing balance of liability? 16,500. I can find the balancing figure in this, which is the purchases made during the year on credit. We'll do it later anyways. Don't worry now. Hey, question is over. We're on the verge of completing our answer now. So this advance for stationery and all, it's a different questions answer. Okay, yeah. Come on, let's close one ledger at a time. The first ledger to be closed, subscription. There is opening, there is closing, there is receipts and payment. Balancing figure will be income and expenditure. How much is it? Here total will be 70, 7,500, 72, 750. 72, 750 minus 2,250. 70,500. In subscription account, I have written two income and expenditure. In income and expenditure account, I'll write by subscription account 70,500. This is my subscription income for the year. I hope everyone got it.
Yes,
What do we have after this subscription ledger? Come to next one. Stock of cosmetics. At the beginning of the year, I had 15,000 worth of cosmetics. End of the year, I had 10,500. Then what happened? We've consumed something? No. We have purchased also. Don't close stock account before closing creditors account. Same is the rule in incomplete records also. Don't close debtors account before closing bills receivable. Don't close creditors account before closing bills payable. And don't assume purchase and sales before closing debtors creditor. Same here. First close your creditors account and then come here. Have they given opening balance of creditors? Yes. Closing balance of creditors? Yes. Amount paid to creditors? Yes. At the beginning of the year, you owed 12,000 to creditors. You paid them 22,500. Still 16,500 is pending. Why? This is because some amount of cosmetics are purchased. 39,000 minus 12,000, 27,000 is cosmetics purchased. I'll write here by. This is similar to May 2025 RTP question. There we have taken it as stationery. Here they have given as cosmetics. So I've written buy stock of cosmetics 27,000. In creditors account, if I've written buy stock of cosmetics, in stock of cosmetics account, I'll write to creditors. How much is that? 27,000. By this, my creditors account got closed. Come to stock account. Opening stock was 15. I purchased stock of 27. Still, this is cosmetics purchased during the year. After purchasing 27, I should have had 42. Am I right? Out of 42,000, only 10,500 is remaining. Why? What happened to the balance? Consumed. It will be returned to income and expenditure account. Cosmetics consumed. 31,500. See, how is cosmetics consumed? They look like this? No. You put cosmetics on the face. Later when you wash, it will all go. Sir, inge ತೆಗೆದಿರ್ತಾರೆ. No, you won't take it like this and then keep and again apply. Once you put and wash, gone. 31,500 will appear in your income and expenditure account as expense. Stock of cosmetics, actually I can write consume. It is cosmetics, consume. How much is that? 31,500. Now identify the balancing figure in income and expenditure. That would become our surplus or deficit. Surplus or deficit? Looks like there is surplus. I would take the total as 157,500 here and deduct all of this. I'll get surplus as 16,500 rupees. Did everyone get it?
Yes, sir.
Fantastic. Please do try questions of this type where they've not asked full-fledgedly. Whenever they don't want to ask 20 marker question on NPO, they'll ask a part of the question like this. Let's now solve question 5C. This is again from our April 2025 MTP. For May 25 exam issued by ICAI. This question 5C is on the topic of bonus issue. Have a look. Read the question. What is it that they want us to do? Following notes pertain to balance sheet of Manoj Limited as at 31st March 2025. They have given the balance sheet. Ignore the balance sheet. Don't read. Come to the end. Show necessary journal entries in the books of the company. To do what? Prepare extract of balance sheet. To do what? After bonus issues. Okay. So there is bonus issue. We need to write journal entry for bonus issue and we'd have to prepare the balance sheet extract after bonus issue. Read the adjustment. On 1st of April 2025, company has made final call at rupees 2 each on 2,70,000 equity shares. How many shares have been issued? 2,70,000 has been issued in the past. These shares are partly paid up. So they're making call of rupees 2. Why are they making call? Because bonus issue cannot be offered to shares which are partly paid up. Bonus issue can be made only to the shares which are fully paid up. Or you can convert the partly paid up to fully paid up by way of bonus. Here they're not asking us to convert by bonus. They're telling call is made and I think they'll receive cash. Read further. Call money was received on 20th April. Okay. So first, when the call is made, receivable is share call. It's an asset. Debit share call account. Because we made the call, the capital will increase. We credit share capital. Journal entry will be share call account debit to share capital. Later when I receive the money, entry will be bank account debit to share call. I'll repeat. Share call account debit to share capital. Bank account debit to share call. Fantastic. Let's write this. First journal entry, share call account debit to equity share capital. What is this amount? How much is the amount? 2 rupees per share for 2,70,000 equity shares. So 2,70,000 shares into 2. Can I say 5,40,000 is the amount called on 1st of April 2025?
Yes.
The money is received on 20th of April 2025. On that date, the entry is bank account debit because my bank balance is increasing. Credit share call because the asset, whatever you have debited your share call, is getting closed. Bank to share call, 5,40,000. This is the correct entry. I hope everyone understood.
Yes, sir.
What do we have after that? Thereafter, the company decided to capitalize its reserves. What do you mean by capitalize its reserves? Bonus issue. How is the bonus issue happening? They're telling it will happen 1 share for every 4 shares held. Company is going to give 1 share as bonus for every 4 shares that is there in the company. How many shares are there in the company? Ignore issued share capital. Firstly, ignore authorized share capital. These are of no use. That is only for disclosure purpose in the balance sheet. How many shares were there? 270. They were partly paid up. Now they become fully paid. For 4 shares, they're going to give 1 share as bonus. Look at their bonus ratio. If the shares held are 4, bonus will be 1. Shares held is 2,70,000. So do 2,70,000 into 1 by 4. 67,500 shares are to be given as bonus. If you have to offer 67,500 shares of rupees 10 each as bonus, you need 6,75,000 rupees in cash. Not in cash, but in form of reserves. Bonus issue is capitalization of reserves. You need to take them from the reserves, add it to capital. You need to take them from the reserves and add it to capital. In order to take them from reserves, we should deduct our reserves. We'll add it to share capital. So what reserves can we utilize? There is an order for utilization of reserves. We should start with CRR, capital redemption reserve. After that, we'll go to security premium. Then capital reserve. Then general reserve. Then PL. Once again, CRR, security premium, capital reserve, general reserve, PL. We can use security premium and capital reserve only if they have realized in cash. If security premium and capital reserve have not been realized in cash, then we cannot use them. Next, this is issue of fully paid up share as bonus. So all the reserves are available. If it was conversion of partly paid up shares to fully paid up, then capital redemption reserve and security premium are not available. We'd have to use CR, GR or PL. Anyways, that's not the question here. I want 67,500 into 10, 6,75,000. I'll start with CRR. Is there CRR in our question? Come to reserves. Do we have CRR? Yeah. 1,20,000. I will utilize full 1,20,000. I still need 4,05,000. So, no, 5,05,000. 6,75,000 minus 1,20,000. No, 5,55,000. So, I'll go to next one. Next, security premium. Is there security premium here? See, they've told that it is collected in cash. Good for us. Even if not, I would have assumed that it is realized in cash. 75. I'll utilize full 75. Still, I would need more. So, basically, my CRR will get exhausted, security premium will get exhausted. Why am I striking a line? Later when I prepare balance sheet, I should know that it is become zero. It will save my time then. After security premium, I'll go to capital reserve, but capital reserve is not there in the question. So I'll take general reserve. 360 is available. How much do I need here? Take 670 and minus 120 and 175. How much do I need? Okay, I would take full 3,60,000. I'll write here capital reserve to write 0. General reserve, I'll take full 3,60,000. So general reserve has also become 0. P&L account has 6 lakh. I don't need full 6 lakh. How much would I need? Take the total of this 120, 75 and 360. Deduct it from 675. What do you get? 1,20,000 is the balance amount taken from P&L. Here we have 6 lakh. From 6 lakh, I will take how much? 120. Balance of 480 will be there in the balance sheet, which we will do later. I will written it now, so it will be easier later. That's it. All the data is ready. It is capitalization of reserves. So whenever I call it capitalization of reserves, reserves will decrease, so I will debit reserves. Capital will increase, so I credit capital. Journal entry will be reserve account debit to capital. But I won't write reserve to capital straight. I'll write reserves to bonus, bonus to capital. Reserves, I will use CRR, security premium, capital reserve is not there, general reserve, P&L. CRR, I'll use full 3,60,000, sorry, 1,20,000 CRR, then security premium 75, general reserve 3,60,000 and balance of 1,20,000 from P&L. Credit it to bonus to shareholder 6,75,000. Later, I would debit this bonus to shareholder 6,75,000 and credit my equity share capital by 6,75,000. This is being bonus shares issue. By this, we are done with all the journal entries. The only thing that I would have to do now is prepare a balance sheet extract. When I start with balance sheet, I'll start with authorized capital, what's given here. I'll write this 30,000 12% preference shares as it is. Let me write shareholders fund, note number 1 for share capital. In share capital, I'll write authorized capital, same 30,000 12% preference shares of 100 is 3 lakh. Here, they've given equity capital as 3 lakh. Observe, how much was the equity capital before bonus issue? 2,70,000 shares. How many shares did we give as bonus issue? At 67,500 to 2,70,000, it will become 3,37,500 equity shares. But what is the maximum limit here?
3 lakh.
How can it increase? I'm assuming that I've taken necessary steps in increasing my authorized capital. I've passed a board resolution and I've also made my representation to MCA. So I'll write 3,37,500 itself as my authorized capital. This is after considering bonus issue. And let me write my issued and subscribed capital. How much is issued and subscribed capital? 2,40,000, no change. Write it as it is. 2,40,000 as it is. 24,000 12% preference shares of rupees 100 each. Next I have with me 2,70,000 equity shares of rupees 10 each, 8 paid up, 2160. Take 2160 in calculator. 21,60,000 in calculator. Did you all take it?
Yes, sir.
This is a credit amount. Come to journal entries. In the first journal entry, you credited it by 5,40,000. So do further minus 21,60,000. Hey, did you take it as minus 2160? You taken positive. Okay. Add 5,40,000 to it. 21 lakh 60 plus 5 lakh 40. It becomes 27 lakh. Why? It was 2 lakh 70,000 shares of rupees 8 paid up. Now when you make the call, it will become 10 paid up. Got it? Then further you will credit here 6 lakh 75,000.
33 lakh.
33 lakh. That is basically what you wrote here. 3 lakh 37,500 equity shares of rupees 10 each fully paid up. Did everyone get it?
Yes, sir.
Yes. So I would write here 3 lakh 37,500 equity shares of rupees 10 each, which comes to 33 lakh 75,000. Remember, out of this 67,500 shares were given away without collecting cash. That is by way of bonus issue. Because the shares were issued without collecting cash as bonus issue, it has to be disclosed separately. But I have to make a separate disclosure against this amount. That is shares issued for consideration other than cash. By this we are done with our share capital. Before we go to reserves and surplus, take the total. 33 lakh 75,000 plus 2 lakh 40 comes to 36 lakh 15,000. And this 36 lakh 15,000 will be written in balance sheet as share capital. Did you guys get this?
Yes, sir.
Then what's pending? We have to write reserves and surplus. Check reserves and surplus. We have with us general reserve of 3 lakh 60. In general reserve of 3 lakh 60, how much is utilized?
3 lakh.
Full 3 lakh 60 is utilized for bonus issue. Nothing is left. Sir, how do you get to know? Here see, you have debited general reserve 3 lakhs. Next reserve that we have here is capital redemption reserve 1 lakh 20. This also we have not left. We utilized it fully 1 lakh 20. So I will write in my notes to accounts. Capital redemption reserve 1 lakh 20 less bonus issue 1 lakh 20. So what is left is 0. Next I have with me security premium collected in cash 75,000. I would write here security premium. Oh my God, one second, sorry. Security premium 75,000. This is again utilized in bonus issue. See how much is utilized? Full 75,000 is debited. So that will also become 0. I would write less bonus issue 75. So that has become 0. Then finally we have P&L account 6 lakh. Out of this P&L account 6 lakh, full amount is not utilized.
1 lakh.
See the journal entry? How much is utilized? 1 lakh 20. I will only deduct 1 lakh 20. 4 lakh 80 will be still remaining. Balance sheet is completely lean. Journal entries also, everything that is required is taken care of. There is share call account and bonus account, which is dummy. Debited at one place, credited at one place. It will go. There is bank account in journal entry, but they have not given the bank balance in our extract of balance sheet here. So it's not a complete balance sheet. This will not tally. It's only extract. Only share capital and reserves. Total of reserves is 4 lakh 80. I will post it to my extract of balance sheet, note number 2, reserves and surplus 4 lakh 80, and that's the end of the answer. Easy.
Yes, sir.
This is our journal entries. 1, 2, 3, 4, balance sheet extract, notes to accounts, and working note for bonus. Let's now start with question number 6A. From our May 2025 attempts mock paper which was given by Institute in April 2025. This question 6A is on issue of shares. There is an adjustment on calls in advance, calls in arrears, as well as interest on calls in advance and arrears. Let's begin. Amit Limited issued 50,000 equity shares of rupees 100 each at a premium of 20%. Payable 20 on application, 50 on allotment, which includes premium of 20. First call was 20. First call is 20 and the balance on call. Let me make a note of the same. There is application, allotment, first call and final call. They have not told final call money. That has to be found as balancing figure. I know totally nominal value is 100, premium is 20, total 120. How much on application? 20. Premium is 0 on application and total will be 20. On allotment, I have collected 50. In that, premium is 20. So my nominal value will become 50 minus 20, 30. They have told that I am going to collect 20 rupees on first call. If I write 20 on first call, balancing figure will be my final call. 100 minus 20 minus 30 minus 20. Or 20 plus 30, 50. 50 plus 20, 70. 70 rupees is collected out of 100. Final call money is 30. I hope you all got this. Number of shares issued is 50,000. Read further. What's happening with this 50,000? All the shares were subscribed. Very good. Mr. M, who held 5,000 shares, paid full remaining amount on first call itself. So, Mr. M, who holds 5,000 shares, paid application money, allotment money correctly. On first call, he did not just pay first call money. He paid the final call money also in advance. So, he would actually not pay any money on final call. Why? He has paid final call money on first call. Because he's paid the final call money in advance, for the time gap between first call and final call, I would have to pay him interest. This interest is interest on calls in advance, and this is my expense. Let's see further. Final call which was made after 4 months. So they've given the hint here that final call was made after 4 months. So these 4 months is the period for which I need to compute interest on this. 5,000 shares against which I have collected the final call money in first call stage. Next, from the first call was fully paid, except a shareholder having 500 shares and one other shareholder having 250 shares. Everyone paid first call money. In fact, Mr. M paid final call money on first call, except 2 shareholders. One shareholder holding 500 shares, one another shareholder holding 250 shares. These 2 people did not pay. So there are 2 bad shareholders, one and another. One holding 500, another holding 250. They paid application, they paid allotment, they paid first call, they failed to pay final call money. They would have paid it later. Whenever they say they paid, for the period of delay, I would have to collect interest from them, which would end up becoming my income. Let's see what's there after this. They paid the due after 3 months and 4 months respectively. So, one shareholder paid after 3 months, another shareholder paid after 4 months. This 3 months and 4 months is the time period for which I will collect interest from them at 10%. And on this advance, I will pay interest at the rate 12%. So, other shareholders who paid promptly is 50,000 minus 5,000 minus 500 minus 250. So can I say it will be 49,250? These people have promptly paid their application money on application stage, allotment money on allotment stage, call money on call stage, and final call money on final call stage. They have not done any advance or not done any arrears. This table will help us pass all the accounting entries. If you can draw 2 tables, one like this and one like this, then you don't have to look at the question at all to write the journal entries. They want us to pass journal entries including interest paid and maintain calls in arrears and calls in advance. That's it. Shall we start with the accounting entries? Let's begin. I would want to write the journal entry for amount received on application. On application, I'll receive money from everyone. Journal entry will be bank account debit to share application account. I would write the entry bank account debit to share application account. How many shares? Full 50,000 into how much per share? 20 per share. I would write 50,000 shares into 20 per share, that is 10 lakh. This share application money will be transferred to share capital, for which the entry is share application account debit to share capital account 10 lakh 10 lakh. On allotment, I would ask full money, I will get full money. How much? How many shares am I asking for? 50,000. How much per share? 50 rupees per share. In that 30 rupees is towards nominal value and 20 rupees is towards premium. So my journal entry will be share allotment account debit. I'm supposed to collect 50 rupees for 50,000 shares, which comes to 25 lakh. Credit will be given to share capital account to the extent of 30 per share for 50,000 shares, and I'll credit security premium for 50,000 shares into 20, coming to 10 lakh. This is amount receivable on share allotment. There is no problem on share allotment if you observe. Everyone has paid every rupee. So I'll write the entry bank account debit to share allotment account for full 25 lakh. Got it? What's after this bank to share allotment account 25 lakh, 25 lakh? Next, let's go to call stage. I've made the call correctly. Mr. M pays extra money. Others pay money promptly. When I make the call, there is no adjustment. After that, when I'm receiving the money, I'll write advance. For now, I made call of 50,000 shares, and for each share I am supposed to collect 20. When I make the call, my journal entry will be receivable share call. First call account debit to equity share capital account. 50,000 shares into rupees 20 per share, which is receivable, which will come to 10 lakh. When I receive this, I'll write bank account debit to share first call. I was supposed to receive 10 lakh, but I did not receive 10 lakh. Did I receive less?
No.
I have received more. Mr. M paid me some advance. Mr. M holds 5,000 shares. Mr. M did not just pay first call money, he paid final call money. Final call money is 30. So I actually received 5,000 shares into 30 rupees for final call extra. 5,000 shares into 30. So I received for 50,000 shares 20 rupees prompt payment, and for 5,000 shares I received 30 rupees extra. Or I can tell my calls in arrears, which is my liability, sorry, calls in advance, which is my liability for excess money collected, is against 5,000 shares, Mr. M paid 30, which comes to 1,50,000. Can I say total amount is 11,50,000 here?
Yes, sir.
And money that I'm supposed to collect is against 50,000 shares into 20. I hope everyone understood. I was supposed to collect 20 rupees per share for 50,000 shares. I've received it in full. Plus I've collected for 5,000 shares 30 rupees extra. This is my journal entry. Calls in advance, what I've received is liability. I have recorded it as credit. Later when I make final call, I will not debit bank account because Mr. M will not pay me the final call money. I will debit this calls in advance and my liability gets closed. I am done with the receipt. Now shall I make the final call? When I make the final call, I'll write entry as share final call to share capital. मौसम अभी बिगड़ने वाला है. After this entry, in the receipt entry, there would be calls in arrears because one and another shareholder, 500 and 250 don't pay. And Mr. M will not pay because he's already paid. For no focus on this stage, for 50,000 shares, I am supposed to receive 30 rupees on final call. So I would write entry for 50,000 into 30 rupees, which comes to 15 lakh each. Now when I'm going to receive money, see who will pay and who will not pay. Mr. M will not pay. Why? He has already paid. One and another shareholder, 500 and 250 will not pay. Why? They will pay later. So who will pay? Only 49,250 shareholders will pay. So do 49,250 into 30. 49,250 into 30.
The 44,000.
I'll receive 49,000.
44,000.
44,000. Sorry.
5,000 is not it.
Oh my God, I've not deducted that. Sorry. 44,250 shareholders are others. 50,000 shares in total. In that, Mr. M doesn't pay final call money because he's already paid advance. These people don't pay because they're bad shareholders. Only others pay. We're holding 44,250 shares. So I will do 44,250 shares into rupees 30 per share. How much is that? 13,27,500. Alternatively, this can be found as balancing figure. I'll tell you how. The entry is bank account debit to share final call. Share final call, amount that I have debited here is 15 lakh. I will credit that 15 lakh because it was receivable. It was debited. Now it is going to be received. I will credit it. Mr. M doesn't pay because he had already paid, which I had credited to calls in advance, which will be adjusted now. So I will now debit calls in advance. How much? Whatever you had credited here.
1 lakh.
1,50,000. Other shareholder and one shareholder who hold 500 and 250 won't pay. 500 plus 250, 750. So shareholders of 750 shares doesn't pay. Do 750 into 30.
22,500.
That is the money what I'm supposed to receive, which I will not receive. It will become my calls in arrears. 750 shares into 30. Did you get it?
Yes, sir.
So alternatively, instead of doing 44,250 into 30, you can take this as 15 lakh receivable minus 22,500 not received minus 1,50,000 already received. Do that. What do you get? You get the same thing?
Yeah.
Narration also I'll put. Being share final call money received after adjusting advance and arrears. Now simple things that I should do. First, pay interest on calls in advance. Pay interest on? First call was made and we received final call money. Final call was made 4 months later. So I need to pay interest for 4 months. And the company pays interest. It pays at 12%. And the company receives interest. It receives at 10%. So shall I pay 12% interest on this for 4 months? What is the money of advance? 1,50,000. On 1,50,000, let me pay interest. Interest is expense. I will debit interest on calls in advance. Credit bank. Why I am paying? 1,50,000 into 12% into 4 by 12. How much does it come to?
6,000.
6,000 rupees is interest expense paid. Interest on calls in advance paid, sorry. Interest on calls in advance paid. Did everyone get it? Next, these 500 and 250 shares are there. No, they're paying me money. When are they paying? This one shareholder will pay 3 months late. 3 months later, I'm receiving money. I'll write the entry for receipt. One shareholder holding how many shares? 500. How much is the money due? Final call of 30. Let me write the entry for receipt of money. Bank account debit. 2. Calls in arrears. Calls in arrears was my asset. I'm receiving money, so I'll credit it. 500 shares into how much per call? Final call was 30 per share. 500 shares into 30 is how much? 15,000. Don't write bank account debit 15. Why? He'll also pay as interest. Interest needs to be paid at 10% for how many months? What is the delay by the shareholder holding 500 shares? 3 months. So on this 15,000, I will compute interest at 10% for 3 months. How much is that? 375 is my income. So it will be credited to interest on calls in arrears. 15,375 is the money that I'll receive. This is from one shareholder. There is another shareholder who is holding how many shares? 250 shares. He paid 4 months late. See here. He paid after 4 months. So 250 shares into rupees 30 per share is the money that I'll receive. So let me write the entry as bank account debit, 2 calls in arrears, 250 shares into rupees 30 per share. Can I say this becomes 7,500?
Yes.
I won't just receive 7,500. I'll receive interest also on the same. Interest will be 7,500 into 10%. Period of delay is 4 months. Do 750 into 10%, 7,500 into 10% into 4 by 12. 250 rupees. Can I say putting it together it is 7,750? Pakka?
Yes, sir.
Fantastic, my friends. That's it. We are done with this answer. If you want, you can transfer this interest on calls in arrears, 375 plus 250 to P&L, for which the entry is interest on calls in arrears account debit to P&L. And this calls in advance interest should also be transferred to P&L, 6,000. Entry will be P&L account debit to interest on calls in advance, 6,000. Anyways, they have not asked it. 15 marks. They've asked us to show workings and past journal entries for the transactions given above. You can additionally write those 2 entries anyways. Got it? There we go. The last 2 questions from MTP May 2025 exam, which is given in April 25. This 6B question is on inventory. They're asking adjusted selling price method, and we are supposed to write a short note on that. Very easy. In an entity where it is difficult to find the historical cost of the inventory, what we do is we identify the inventory at the selling price, and from the inventory which is available at the selling price, we adjust or we deduct the profit. From the selling price, if we deduct profit, we'll get cost. So what we do is we will count the physical inventory, or we'll identify the closing stock at selling price. We will adjust that selling price by deducting the profit away from it. When we eliminate the profit from it, what is left is cost. And that's the method of adjusted selling price. Quickly see the answer. Adjusted selling price method is also called as retail inventory method. It is used widely in retail business in our FMCG sector, where the business comprises of inventory items. Individually identifying the cost is not possible. Then we identify the historical cost by calculating the selling price of the inventory and deducting the profit from the same. Understood? Then we have another one, principal methods of ascertaining the cost of inventory. What are the principal methods? Considering historical cost. We have first in, first out, last in, first out, simple average method, weighted average method. Without considering historical cost, we have adjusted selling price method and standard cost method and base price method. Let's see the methods. Specific identification method, first in, first out method, weighted average cost method, and without considering the inventory, then you have specific identification method. Meaning, if you can identify every unit of inventory separately, you will go by this FIFO, LIFO, SAM, If every unit cannot be identified separately, every unit has its own value. Then you follow specific identification method, SIM, S-I-M. Done. You can watch the quick revision video on valuation of inventory. This part is covered in the initial stage only. If you don't find this, please do ask me in the comments. I'll let you know. I'll share the link for the quick revision video of this valuation of inventory topic. Last question that we have is, this is a choice question. Explain in brief basic considerations for distinguishing between capital and revenue expenditure. How do we distinguish a capital expenditure with revenue expenditure? Very easy. In order to determine whether an expenditure is capital or revenue, we need to consider the nature of business. Purchase of building for a real estate agent who buys and sells buildings is revenue. Purchase of building for non-real estate agent will become capital. So it depends upon the nature of business. Second one, purpose. Purpose is also very important. I am a real estate agent. I bought a building. It will still not be revenue. Why? What if that building is going to be my office building? The purpose is to take long-term benefit from that, then it will be capital. If the purpose is to sell it, then it will be revenue. So the first point for consideration, nature of business. Second point of consideration, purpose. Thirdly, materiality. If the amount incurred is huge and material, it is usually capital. If the amount incurred is not huge, not material, then it is revenue. So nature of business, purpose, materiality. Third one, recurability. If the expenditure or income, that receipt or payment, if it is recurring, repetitive in nature, it is revenue. If it is not recurring, non-repetitive, it happens very, very rarely, then it will become capital. I'll repeat. Nature of business, purpose, materiality, recurability. And the last point is revenue generation capability. If that specific payment is capable of generating revenue income to you, if it is generating revenue, it cannot be revenue, it will become capital. If it is not generating revenue, then it can become revenue. So the points of consideration to determine whether an item is capital or revenue is nature of business, purpose, recurability of the expenditure, materiality. There is one more which is not here that I have given it to you. What is it? Revenue generation capability. One last time. Nature of business, purpose, recurability, materiality, and revenue generation capability. Did you all get this? So, like I promised, we've done one complete paper writing practice. I hope this will help you all in your exam preparation. Do let me know in the comments if there is anything that you would need. Also, let me know if this is helpful to you all. And remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys stop learning something, you're stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It's to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game?
Yes.
I hope you are, and stay in the game and do well in your upcoming examination. May God bless you. Can't give you gold, but will surely include you in my prayers.